3, 2, 1, here we come. Anthony, we're live once again Wednesday morning, you guys, 10 a.m. or 10:03, I guess. Anthony, we're running a couple minutes late. You're having a bit of trouble putting up the green screen this morning. I wish you guys could have seen that for a good chuckle. Anthony, you got the green screen up. You got your tea ready. Looks like you're having a quick bite to eat. How are you feeling? Good to go over there?
Feeling good, yeah.
Right on. Now, we've got a packed agenda for you guys. Today, it's Anthony and myself for the full hour and a half. We're going to go through each and every one of the miners. Most of them have now produced July production results. So Anthony has put together some great little tables to help us visualize the production results that we've seen. We also had a huge headline story this week with CoreWeave and Core Scientific increasing that blockbuster contract by an additional 112 megawatts. So we want to get into that. And a lot of institutional activity as investment advisors are now preparing to start offering Bitcoin exposure to their high net worth individuals. Hence my hat here, Anthony, Bitcoin propaganda department from our good friends at VanEck at the old Nashville convention. Now I'll take the hat off. I got a haircut yesterday, you guys, so hopefully you're feeling good about that. I am as well. Anthony, we'll move into the presentation here. Before we get into the individual analysis slides, like I was just talking about, I wanted to talk Bitcoin. So I'll bring up a chart here, you guys. This is a 1-year view on the price of Bitcoin. You can see hovering just north of 56,000 at the time this was taken. We've got a 50-day and a 200-day moving average on the screen. The 200 is the blue line. The 50 is the purple. As you can see, we had a golden cross back in November, led to a really strong rally in the price of Bitcoin. Right through Christmas into this year, Anthony. However, the 50-day is approaching the 200 in a death cross fashion here, which obviously isn't good from a technical perspective. How are you feeling this morning? How are you feeling about Bitcoin and the miner prices we're seeing?
Yeah, I'm feeling okay. Bitcoin prices seems to be in that sort of 55, 56, 57 range. Last couple of days recovering from the weekend drop. Mining companies are trying to sort of pivot to themselves, right? But the share prices are showing a little bit more volatility in the Bitcoin price at the moment, so difficult to sort of follow the correlation there.
It most definitely is. Now, we saw a dramatic pullback here earlier in the week, Anthony. Friday really kicked that off. Do you feel like the bottom is in? Do you think there could be some more pain, or are you not even willing to warrant a guess at this point?
It's difficult to try and guess because there's so many things that affecting global macroeconomics and political and. I'll just give you an example today. So I got a email this morning to say that the gymnasium I'm a member of was closing at 4:00, so that staff could get home before the riot started. I mean, this is the United Kingdom, and we've got sort of riots on the streets in a number of the cities here. So, and that's just one example. We've talked about the markets impacting. Japan's had a challenge. We talked about political impacts, not just in any country, but globally. There's been a sort of a change around we call it a changing of the guard in the UK, and sure. Looks like France and Italy are following suit. The US with Trump as potentially looking, closer to going back into the White House. So there's a lot of change happening, and people have polarized views of that. So all these various indicators are going to impact, the markets, and the markets tend to impact the price of Bitcoin. So it's very difficult to say, are we at a bottom at the moment? From your graph there, you're explaining to us before about the moving averages, and probably want to maybe go into explain, what some of those technical issues are.
Yeah, I certainly can, Anthony. Generally, I don't trade a lot on technical analysis. I'm more fundamental myself, but the two indicators I do use, you guys, which I would strongly recommend you at least consider, are the RSI, the relative strength index at the bottom. You can see on the 1-year view here, we're sitting at, I think it's 34. So anything above 80 is overbought. Anything below 20 is oversold. So 34, we're close to that bottom end. spectrum being oversold here, as we can see that big dump. And then the 50 and the 200-day moving average are nice just to kind of see where we're trading at in relation to those longer term averages. So again, you guys, to me, it does look like obviously there could be the start of a bounce forming here. It really just depends if this 50-day is going to cross or bounce off the 200, which obviously hindsight is easier to judge than looking forward. Now, Anthony, a couple other slides before we get into our analysis here. We're up to 40 people in the live stream, so welcome you guys. A lot to cover this week, a lot of news and earnings reports, so we'll get into that shortly. Make sure you hit the like button. Let us know which miner you're here to talk about and which questions you may have. Hash price, Anthony, we talked briefly about this earlier in the week. We had heard the figure $29 being thrown around as kind of the rock bottom hash price that miners could create a margin or any type of profit. IREN came out with their energy prices considerably higher than prior months, so that 29 would need to be much higher in some situations. We have seen a bit of a bounce here. We're moving back up towards the low 40s. What are your thoughts on hash price right now, and how is this impacting the miners?
This level at the moment will be impacting some of the miners. The IREN issue wasn't so much about the current hash price here. It was more to do with probably I think that they've in previous periods they go for these short power agreements where they hedge over like maybe 1 to 3 months, and you know, in the summer months energy prices are going to be higher to hedge because there's probably, like, you know, obviously the usage, the demand, the weather impacts the amount of power. But miners hedge for a good reason. When the energy price really escalates, you can then sell that power back to the grid, and they use this hedging technique to really good effect last year. In fact, in some of the months last year, they had negative power costs because they'd been receiving a number of credits. However, in July, the actual market rate of power was very stable and actually quite low. And so if you're going to set up a hedge for July at a higher price than the market price, it means that you pay your hedge price for power and not the market price. So they've sort of like got themselves into a corner on this one here. But I mean, it might just be for a short period. We don't know the details of how long this particular hedge is, but you can see clearly that the company came out and announced they were looking at their strategy for power going forward. And so and just to give you an understanding of this, so we were fortunate to go to Riot Platforms' flagship site at Corsicana. So Riot have got two of the largest sites in the world. They've got the Rockdale facility, and they've also got the Corsicana site. So Rockdale, they have a purchasing power agreement for 345 megawatts of power. So they hedge that power something like 3.9 cents. Now, bear in mind, when that hedge was taken out, power cost was considerably lower than what they are today. So they benefited from like a contract was taken out years ago, and it still has a number of years left on that contract. These contracts can be like 10, 12 years in length. So, you know, if you get in at the right time, the timing, you know, is good, you can get yourself a good deal. If you try and go to hedge now in the markets now and then locations, you're not going to get those prices. And so with Corsicana coming online this year, this April, they had to determine whether we're going to go down the same route again. And actually, Jason and the team at Riot, they said, actually, we're going to use the market rate. So it basically gives them a little bit of cover. So, you know, these facilities are less than 2 hours away from each other. So they're a short drive, you know, from Corsicana to Rockdale. So they're in the same area in terms of power pricing. And they looked at the power pricing last year from the market position, and it showed quite clearly that, you know, if you've not got a hedge, you can still get really good power. And then all you just do is you curtail energy when the pricing goes, you know, really high. You can turn these machines off in like probably less than a minute. So they've used that strategy for Corsicana. And on Riot's update, it was showing you, they actually broke down their power costs for both sites, and they have an average power cost there. So have a look at the Riot Platforms update this month, see what power they were playing. But obviously the concern was, and kudos to IREN, that when they released their update, they highlighted the cost of power, which was actually, it was actually higher than the cost of revenue. And we've talked about this before. When you have miners who are paying more for power than you have for the price of Bitcoin, and you sell your Bitcoin on a daily basis, you've effectively got to switch off, because if you don't mine Bitcoin, then you don't incur the power cost. Now, if you've got a hedge, you're paying to utilize power, so you have to use the power. So I suppose in IREN's case, they had to use that power in July, irrespective, and so they've effectively, it's close. So I think it's a few $100. It was so close to break even per Bitcoin, but you still then got to pay staffing. You've got to pay professional fees, your G&A costs. So there are a lot more costs to be paid out that they haven't got the revenues in July for. So let's see what the next update comes out with. I mean, I'm sure Dan will be coming on the channel if they release their results this month, so we'll get more of an indicative understanding from him, direct from the CEO as to that strategy. But these hash prices at the moment, I mean, we've heard about miners, who can manage at 29 cents, but this is challenging, and yet we're not really seeing the impact on the global hash rate in terms of miners switching off. So it looks like a lot of miners are mining in the hope that maybe the Bitcoin price rises. They've got the hodl, they can then get back the additional cost at a later date in time.
Sure. Well, yeah, and that's the problem right now. If you have all the infrastructure built, set up, you hardly want to turn all your machines off, assuming Bitcoin price will continue to go down. But difficult conditions, as you say, Anthony, about a $300 spread on IREN just in terms of the power cost versus revenue. However, we've seen Bitcoin fall off considerably since the end of July there. So as you say, hopefully those hedges are changing up for this month. Now, Jane, you're welcome for explaining the energy. We're going to talk about this theme a little bit more, Anthony, but we really want to start pushing the education piece on the channel more. So just like you went through energy strategy and hedging there, we want to start getting some more experts. You'll see on our next slide when we have our interview schedule, we've got a few industry groups such as Immersion Technology or M&A Activity, Wall Street Analysts, some other people involved in the community that support the mining group here that we can get on and learn a little bit about. So you'll talk about that in a second, Anthony, but great comment from Jane, and thanks for spending the time on the energy infrastructure. Now, mid-morning market update, you guys, really a mixed bag today. Soluna leading the pack. We're going to talk about Soluna, obviously in more detail in a couple minutes here, but nice to see them on top. On the other end of the spectrum, you've got Bitdeer. They had a great day yesterday. IREN, obviously struggling with those energy prices that they just came out with for July. What do you make of the market this morning, Anthony?
Yeah, so the market's changed a little bit since those numbers. So at the moment, miners that are in the red, you've got IREN down nearly 10%, Bitdeer 7%, HUT 5%, Bit Digital 4.5%, Riot 4.5%. At the top of the tree at the moment, you've got the likes of the core scientific warrants, so the W warrants, up 4%. CIFR's up nearly 4% today. CORZ itself, the share is up 1%. DMG is in the green, and TeraWulf's in the green as well. So obviously with the price of Bitcoin, and it's just hovering over 56,000 at the moment, 56,100, you're seeing some of the miners come off, and with the Bitcoin price actually got to nearly 58,000 today. So 57,750 was the high, and when you see it drop by $1,500, $1,600, you automatically see the miners also pulling away as well back from where they were, because many of the miners were up considerably this morning. I mean, some of them were up significantly. Core Scientific was up over $10 this morning. Well, the share price was over $10, not they were up $10, but so we just need to see where the Bitcoin price is. They're still correlated to that. So Ethereum's look to be taking a bigger downturn than the Bitcoin price. So Ethereum's down nearly 5% today. Bitcoin's now down to 55,950. So it's changing constantly. As I say, lots of global factors impacting the price of Bitcoin, and not just Bitcoin, but global markets. Until we see some sort of like settlement in those areas, when you potentially got a couple of world wars on your doorstep, it's going to be a challenging time. But we'll come on to more positive news as we go through the update there. But yeah, mining stocks. I mean, if you know what you're investing in and you've done your research, when the Bitcoin price gets back to where it needs to be, the mining stocks will follow.
That's what I was going to say, Anthony. I don't know if it's just experience or exposure to the mining stock, or I'm becoming numb to it or what, but these big swings just don't bother me in the same way they used to. Obviously, the World War III concern does, but in my opinion, if we're going nuclear World War III, I've got bigger problems than my portfolio exposure. But aside from that, I'm starting to learn the ebbs and flows here. Obviously, a great trading opportunity on Monday for anyone who's waiting to deploy cash. We've got a few questions talking about some trade opportunities this week. So we'll talk about that in a second here. We've got 2 more slides to get through, Anthony. So the first, starting to talk about some of the news in the headlines this week. So just let me reload this one. A couple of interesting charts from Twitter here. So Crypto Rover posted a really interesting comparison to the 2020 cycle crash. You can see similarities in the 2 graphs there. This is comparing really the pullback we saw this week and that extreme fear or jump from fear towards the Bitcoin miners. Then we've got on the right there from Vivek, a chart showing the accumulation of whales in the space. So these are Bitcoin addresses that have not sold. They continue to buy. You can see a real shift from retail hands there over to some of the longer term visionaries, I guess, in the Bitcoin space. And then interestingly enough, I wanted to throw this in just for interest. Bitcoin Magazine put out a note saying that a wallet from 2010, Anthony, they were mining Bitcoin at an average of 20 cents per coin. They just came out and moved $14 million worth of Bitcoin. So we're starting to see some really interesting activity. The ETF trading volume continues to be high with $2.1 billion flowing in. That was from Monday. So on a macro scale here, you guys really starting to see a lot of bullish momentum and setup coming to the market. Now, if we take that a step further, we move into some of the more detailed headlines around the Bitcoin stocks themselves. You can see Morgan Stanley today opening up the floodgates for their 15,000 wealth advisors to start advising or pitching Bitcoin to their high net worth individuals. So British Hodl is someone we've had on the channel, a great member of the Bitcoin community. He posted out his proposed pitch to these clients talking about a 3% exposure and how easily he sees that conversation going. So time will tell. We talked about the Japanese carry trade on Monday. Mike Alfred also mentioning the importance of these financial advisors starting to pitch Bitcoin to these high net worth individuals. But you can only imagine this is going to increase the buying pressure. And now with these ETFs, Anthony, they've got a great on-ramp to really make these purchases in a way they weren't able to just a few years ago. So wanted to get your quick take on Morgan Stanley and positioning Bitcoin in these portfolios now.
Yeah, it's just a case of we're seeing this more and more, call it adoption and availability to push Bitcoin in certain types of investment tranches. So this is again, it's just more positivity. We weren't having this before. We were having the likes of Morgan Stanley and JP Morgan and BlackRock all against Bitcoin a couple of years ago. Now they're sort of all coming on side one by one. The dominoes are falling. So we had this again. I've said this before. We had this again when mobile phones companies came out and the telephone companies were, so worried about their profits that they started coming up with these ludicrous ideas that mobile phones would give you brain tumors, or the fish in the Atlantic Ocean would all boil up because of the cable in between the UK and USA. None of that went through. The other one was the internet would never work, and believe you me, we're using the internet more now than we've ever done. So Bitcoin is it's effectively, as Mr. Smith would say, it's inevitable. It's just a case of each day goes by, we're getting these news updates. This year those ETFs have bought more Bitcoin than anybody. I mean, they've been buying Bitcoin 10 times quicker than it's been produced. So somebody's got to be selling Bitcoin for those ETFs to be buying it. So I've not sold any of mine. I'm not sure you've sold any of yours. So that's two of us haven't sold anything. I'm sure there's a few others out there that haven't sold theirs. But, when these BlackRock ETFs come in and buy 5,000 a day, and there's only 450 getting produced a day, they're buying it from somebody. And if there is, if they still want to maintain that level of purchasing, and now Morgan Stanley getting in on the act as well with their advisors, then that means there's going to be even a more scarcity of Bitcoin, which means the price will start to rally because people, will only sell at a certain price. And so you can sort of from an economics point of view, you can see what's going to happen here, the supply and demand nature of a scarce asset. And this is scarce. This isn't like gold. Gold, we don't know the end of gold, but we know the end of Bitcoin. There's 21 million, and we've already produced 19 and a half. So there's only 1.5 million that hasn't been produced. So
well, that's what's so interesting about this purple chart. You say who's selling. Recently, it's been Germany, Mt. Gox, and Celsius, but that selling pressure is now gone. And you can see this purple chart here, Anthony. Bitcoin going into those wallets are not coming out. You mentioned there's only 21 million, but we have to always mention the fact that a number of those are already locked up, lost, missing in the Satoshi original wallet. There's not necessarily the full 21 million float even out there at today's levels. Now, the next slide here, a quick update on earnings calendar. So we are doing our best to get Core Scientific on. We also have Bit Digital in discussions, but the slide you see on the screen, these are locked in interviews in terms of release date over the next month. So we've got Bitfarms this Friday, Anthony. Next week, a full lineup. So we're not going to have a live stream next week. We've got Bitdeer Tuesday, Wulf on Wednesday, Hut 8 on Thursday, and then Soluna on Friday. Following week, CIFR is going to be on the channel. Tyler Page, which will be great. First time he's ever been on the channel. Always nice to add new tickers to the group. Talking about earnings on the 20th. Then we actually have Russo, which is an immersion expert, immersion company that partners with a lot of these publicly traded miners to really enhance and optimize their immersion technology within their facilities. So we're going to be having a few of their experts on the channel. If you have any questions at all about immersion specifically, the benefits, what it does, how it works, great opportunity for education there.
Just want to add a couple of points there. People in the comments are saying, why aren't we covering other miners? I mean, we're covering about 15, 16 miners. And, that's probably half of the North American alone public miners. There's probably over 30 North America. Then you've got some in Europe. You've got the likes of Northern Data. And there'll be more globally. But, to cover 15 or 16 takes an immense amount of time to do that. And to be able to sit here and talk about these miners, when you look at these Wall Street analysts who are covering maybe 4 or 5 miners, they're not covering them all. So some of them might be covering 3, 4, 5, 6. It's more work for us. So we have to prepare for these sessions there, and to try and look at 30 miners is a real challenge. And believe you me, I've been doing this, for 4 years now, and I've kept pretty much, most of the same miners in that period. We added some this year. Some of them came part of the platform, came on the platform. So, rightly so, we want to make sure that, they're included and people highlight them. And when we get sort of like, why are you covering Gryphon or Soluna or DMG or, SATO? Well, I was covering IREN three years ago when they were half an exahash. And all these miners we talk about today are bigger than half an exahash. So, potentially one of these could be an IREN in the future, who knows? But nobody was complaining back then. In fact, probably nobody was actually following IREN back then. I mean, there's IREN, people are following IREN in 2024, but I didn't see them in 2023 or 2022 when the share was like $1. But I was following for the last 3 years. Dan Roberts came to me and asked if he could be part of the group. So the CEO asked me personally, could be part of the group. Be great for to get IREN exposure with the likes of Marathon and Riot, and at that time Argo Blockchain were one of the biggest miners, Bitfarms, Hive, Hut, and so I put them in the group, but there was conditions. You had to provide the data every month, and they have done every month. And actually, you look at some of these miners updates now, they put so much in there. Look at IREN's update yesterday. There's a lot of information. You leave that update, you're thinking, I don't need to know anything more because it's all there. And, you know, they did highlight the energy, and they put some comments in the below the table to say why there was a problem. And Dan Roberts has actually even gone on X yesterday and answered a couple of tweets as to why. So again, you know, kudos to a CEO for doing that and explaining it, you know, very transparent, very upfront. And it sets the you know, the benchmark for other miners as well. But you know, other miners in the space are doing equally really good updates. Look at Bitfarms updates. Again, it's a full update there. You've got the likes of Riot Platforms and Marathon Digital do good proper updates listing everything there. And you know, people say, I've seen the comments there. Why are we showing it? You know, always favourable to Riot. We actually only can call it what we see. I mean, we've been down to the biggest facility in the world, so we've been down to Corsicana. If you go to Corsicana and see what they're doing there, you'd come back with the same impression that Bryce himself had. You know, it's a massive site. We can see what's happening. They showed us, you know, we can see what the building B1 and how B2 is going to be completed. So we know what's happening there. And I've been stood on saying, you know, for the last 18 months, their production is nowhere near where it's meant to be. Nowhere near. So, you know, I've been cringed, you know, every time I get a monthly update. These last couple of months, I've started to see green shoots because the hash rate is there. The machines are plugged in. Now we just want them to get fully operational. So get the power switched on as well. We just saw 4 exahash being energized in the month of July alone. So 4 exahash, that's near the size of Hive Digital going online in 1 month. And I expect another 4 exahash coming online in August as well, or certainly, you know, 6 or 7 by the end of September. So, you know, they're going to be, you know, some of these companies are going to get 4 exahash every month to get their targets for this year. But we've seen, you know, Riot do that. We've also talked about the likes of, you know, things like stock compensation, and we'll come on to that in a little bit as well there. But we do highlight the things that sort of like we find troubling and shareholders find troubling. So, you know, we do, you know, we don't have to put all the comments that people put online, but we still feel bad. I'm a shareholder in Riot. I'm a shareholder in Marathon. Do I like the size of the stock compensation going to those companies and a lot of other companies? No, I don't. I don't believe it's. I believe it's excessive. You know, however, I have a vote, and I can vote when that comes up for public voting for shareholder vote. Then I can vote yes or no to that stock compensation. And I think a few years ago, actually, Riot's compensation got voted out by the shareholders. So you can do that. It's all the shareholders are allowed to vote in these. So when it comes up at the AGM, you'll normally find like re-voting in directors. So you as a shareholder get the opportunity to vote the directors back in. And you also get a chance to vote on stock compensation as well. That's your right as a shareholder. You can do that. They don't just sort of like come up with these massive numbers and then say, we'll do it behind closed doors. They've got to put it, you know, it goes before the shareholders to vote on. And there's no big shareholders in Riot other than some of the big institutions who may have 7 or 8%. So BlackRock or JP Morgan might have a decent size in, but it's not enough to vote it over. So majority of shares in those two companies are probably the retail investors. So it's down to retail investors. If they feel strongly enough, and you know, there's definitely a case when these results came out now, the levels. Bear in mind, you've also got to look at stock compensations. They have to achieve all their targets to get that level. So they put in the worst case scenario. If they achieve everything, they put in the amount that they could possibly get if everything was achieved that they said. So, you know, there'll be things in there that they think will never get to that level. But you know what? If we do, and the shareholders benefit from the share price, then we also benefit. But the likelihood is we'll not get all those. And so what will happen is they'll get rewarded based on what they on the achievements set out. So they actually have a plan to follow, and theirs is against the Russell indices and how the stock price does compared to other companies on that index. So they have to perform better than other companies for their stock compensation to be awarded, and it will be awarded pro rata based on how they perform. And I think Jason said a couple of years ago they didn't get their performance and it was handed back. You know, it was taken back. It wasn't given out to them. So that then goes back into the accounts. It gets credited out. So people see a number and they automatically think they see like 32 million a quarter and they think that's a lot. And it's a lot as well. But when Jason, we asked him to explain it, treat us like 12-year-olds and explain what it means, and he did. And we still got a load of comments to say it's ridiculous. And then the next day, Marathon came out with 80 million of stock compensation. I haven't even seen one comment about that yet. So please let me know what your thoughts are about Marathon's 80 million stock compensation. Is that valid? Because they've got at least 60 employees in that company, and Riot have got something like 550 in their company, and Jason said they all benefit from it. So who's getting a great deal here? Is it Marathon or is it Riot? I don't know. I'll leave that to you guys. But I'm like you. I see it as a big number, and hence I do ask the questions and I do put it in my articles. I don't turn around and say it's all great. I think these companies are 4 or 5 years old in terms of Bitcoin mining. They're not like 25-year-old established companies that bring in, 5 billion in revenues a year and 4 billion of profits. Some of them aren't making profits. So, the argument would be is why are you paying stock compensation during times when the company isn't delivering? So that's sort of like a little 2 pence just to put the point across there, because I know people are anxious about some of this. But as we see all the results come out in August, have a look at the stock compensation line. Let me know your thoughts on these other companies. And bear in mind, when you look at Marathon and Riot, you're looking at companies that are 5 billion and close to 3 billion in market capitalization. So, do think that, you're not going to get a company at 100 million market capitalization paying 30 million in stock compensation. A, they won't have the number of staff the same there, and B, they won't be able to afford. Well, they could, but it'd just be basically, the dilution of shares in a company would be ridiculous. So, as I say, I just thought I'd put that point across because I've seen a couple of comments in the chat about it. But please, we try and be impartial. We were grateful for Dan highlighting in the update yesterday about the energy price. We've covered that. We've covered stock compensation for Riot. We do cover we ask the challenging questions, and if you've seen the podcast this year, you'll have known that some of the CEOs that come on, they get asked questions, they get asked your questions. So sometimes we come out and ask the subscribers or the followers to put their questions through, and many times a lot of you will know that we're asking your questions because it will be the same question you sent through to us. So I just thought I'd put that across.
There you go. There's the interview schedule for the month, Anthony?
Absolutely.
You can tell Anthony gets passionate about this, you guys. We don't like the softball questions around here. We want to ask whatever is on your mind in a professional way. So speaking of that, get your questions in for the interviews coming up this month. We were on Dennis Porter, Satoshi Action Fund. That's going to be on the 27th, SATO on the 29th, and then DMG on the 3rd of September. Anthony makes a great point here, you guys. We are a great conduit to get these questions through to management. So if you have any concerns or praises for management, make sure you get them through to us. Now, Gary's in the chat, Anthony. He's here. He wants to hear about Core Scientific, but Gary's going to have to wait for 2 more slides because we got a few website enhancements we wanted to mention. So number 1 is the gallery feature. When you go to the website, you click on the individual miners. We've now got access to a lot of kind of behind the scenes videos and images from these mining facilities, these data centers. So go in, take a look at any of your favorite miners. You're also going to notice a news tab here to the left. Because Yahoo has delisted a lot of the crypto or Bitcoin focused companies, it's become very difficult to find consolidated, aggregated news for the Bitcoin mining community. So we're working with the miners right now to get the API for their own websites. And we're going to have a live news feed for each miner on Power Mining Analysis. So for example, you can go in there, you can find all the most recent events for TeraWulf, Riot, DMG, all on one website, you guys. And then in addition to that, we've added the leadership tab where you can go in and get a bio and image of all the core C-suite executives at each one of these companies as well. So continuing to enhance the website. There's also the operating locations on there where you can see each and every one of their sites, along with the megawatts under management at that location and the focal point of operations, whether it's self-mining, hosting, whatever the case is. So Anthony, just a quick plug for the website there. Now, moving into the specific miners, you guys, we're over 100 concurrent viewers. Make sure you hit the like button. It's great to see the triple digits. Anthony and I would like to have a big showing here. Anthony had said we're going to do a 1-hour podcast today. And I said, there's no way, buddy, you're not going to be able to get through these miners in an hour. So we're 34 minutes in. We're going into the miners. We'll see how we can make out here, Anthony. First and foremost, Bitfarms. Now, there has been a lot of discussion about Bitfarms and Riot in the media right now. A lot of our subscribers are saying, hey, I want Bitfarms to stay independent. I think the Riot should take them over and become the biggest one in the world. There's a lot of debate on both sides. You and I have both come out saying we are shareholders in both of these companies. So first question of the day for you from Midwest Thailand. What do you think about the situation between Riot and Bitfarms? I know you both hold shares in each company. Do you agree with the Riot takeover or not? So Bitfarms up on the screen here. You can see they're making great progress in Paraguay. They're moving ahead towards their own individual or independent goals. What do you think of this merger discussion?
First things first, Bitfarms is a great company. In terms of, they've got great management team, leadership team there, now led by Ben Gagnon. Production-wise, they're top of the table for the last 18 months, closely followed by Hive Digital. Those two miners have been, in terms of operations, the best of all the miners over the last 3.5, 4 years. No one's actually come really that close to them on a consistent basis. Every month they put out really good updates. Now, it's just one metric. I don't want to get people bogged down thinking that's the be all end all. But if you're able to operate in the business that you're in, surely that must be good. And if you listen to Jason, Jason as the CEO of Riot Platforms, the reason they've been looking at Bitfarms for the last 18 months, so it hasn't happened this year. We only found out in April this year that this was actually happening. But actually, the conversation started 12 months before that. And there was obviously agreement that nothing would go public. And so those conversations have been happening for well over 12 months there. Jason will tell you that, the reason looking at Bitfarms is they actually like the company. The company do things really well. And so why not buy a company that operates really well? If you're a football team and you want the best players in your team, you're prepared to go out and buy them. And, the market will determine the price. Now, I know that people are upset about the price they offered. I think it was $2.30. You look at the Bitfarms price today, it's $1.95 today. So, and actually when they made that offer, the average price over the previous few months was actually less than $1.95. So they did apply a premium to the average market price. Now, shareholders will be saying, no, it's worth more than that. And they might be right in terms of they feel it should be worth more, but the market determines how much a company's worth. And, at the moment today, Bitfarms it has a market capitalization of under 900 million. So it's no longer $1 billion miner at today's prices. It was over $1 billion a few weeks ago before we've seen Bitcoin price drop down. If you're, the positive for me is Riot Platforms as, a big miner with two big sites in Texas are looking at, acquiring Bitfarms because they operate in a load more areas. And for them, they get a great miner and it also de-risks some of their operations. So they not have everything in one place. And Riot have just bought a company called Block. Block only had like 60 megawatts of operational power that they're using for self-mining and access to more power. And Riot bought those, and I got to meet the Block team in Nashville, who are now part of the Riot team. So the CEO and all his senior staff were in a meeting. I got to meet them all, and I asked the Block CEO if he'd had any offers from other companies, and he said they had, but the offer from Riot was a good offer, and they felt being part of a really big miner was beneficial. Now, I want Bitfarms to succeed, 21 exahash by the end of the year. Growing there. But the challenge for Bitfarms compared to the challenge for, say, some of the really big miners is it's about capital to grow as quickly as other miners. So they have got a great target to get to by the end of the year. It gets to 21 exahash, and they've got that covered now. But the market capitalization at the moment means that when they're going to raise more funding for the next leg up, if the market hasn't given them any benefit for the growth that they're doing at the moment. So if the share price is still hovering around this price, it means they're having to sell more shares to raise more capital to grow further from 21. Now, if they become part of the Riot family, then Riot would take all the staff of Bitfarms as part of that group there. Literally every member of staff would, because at the end of the day, you've still got to operate in all these countries. Bitfarms operates in 12 locations in 4 continents, or 4 countries. So they've got to, you still got to manage those sites. So they would take all the staff with them. And, having the biggest miner, the kudos of being the biggest miner would have something to it as well. And we know that, in 3 or 4 years' time, there's only going to be a small number of miners in the Bitcoin mining industry, because energy prices will, as they double every 4 years. It's less likely that you'll have 30 separate companies. There'll have to be some, real M&A activity. And this year we've seen quite a lot of M&A activity already. We didn't see as much as we expected in 2022 when the Bitcoin price fell to $15,500, but we are seeing it this year. So we've seen the likes of CleanSpark buy out Grid. We've seen Riot buy Block. There's other discussions there. We'll come on to Gryphon shortly, but they've had 25 conversations with companies that potentially meet some M&A activity there. And so I feel I can see both sides. I'm not I'm a shareholder in Bitfarms, shareholder in Riot, but I can see the benefits of both. I really hope Bitfarms can grow 21 and get to 35 by the end of 2025. But if they grow with Riot, they'll get it done quicker. In terms of
which position is bigger for you, Anthony?
Believe it or not, that they're on a par. They really are. I think probably with today's share price, maybe Riot's. We're talking a similar percentage. It might be both around 8% of my portfolio. So it's
mine are equally sized. Yeah, mine are fairly equal. And
yeah.
To be honest, I don't know the answer to this question.
I don't know the answer. And actually, the great thing again about this,
it's a vote.
Shareholders. It's not down to. It's not down to Jason or Ben. It's down to the shareholders. There's no insider shareholders at Bitfarms that have anywhere near the required. I think the internal directors there, they may have 2% of the shares. That's not going to get across the line. They can't do anything about it. So the retail shareholders will decide at the end of the day. Now, Riot will have 20% of the shares by the time that voting comes along, or they'll have 19.9%. So they'll have a decent stake in the yes column for merger. But it's down to individual retail investors, and then you've got obviously the institutional investors. So the institutional investors will probably carry a bit of weight. So however they decide to vote will be interesting. And you have to take your feelings out of the equation. This isn't about I love Bitfarms, I love Riot, or I hate either of them like that. This is about business and what's the best for business going forward. And what would people be saying if it was CleanSpark or Marathon Digital buying Bitfarms? Is it is an issue with Riot buying Bitfarms? Interesting to know your views on that.
Well, I think it's just the production stats for Riot this past year haven't been great, right? And they're saying
haven't been great yet, but you know what? I think they're starting to turn now. So that we'll come onto Riot.
Yeah, we'll come into Riot here. We'll jump over to Riot. I think you're right, though, Anthony. Long-term consolidation is going to happen in this space. I think for the short term, I like to see the two companies competing and hitting their individual targets. I like to see what Ben can do at the helm of Bitfarms. It's great to see the images of Paraguay coming out here. We talked about how red the dirt is in South America, Anthony, but seeing these data centers popping up, really a nice looking world-class facility there. So short term, I think personally, I would like to see them kind of duke it out, but longer term, I think it does make sense to have that consolidation. And Riot Jason's talked a lot about keeping Bitfarms as kind of an independent international division of Riot, which I think would be really interesting as well.
So just a couple of things to pick up in the operational slide before we move on to the next miner. Bitfarms, we know operationally really, really good. So they had an improvement in their Bitcoin mine this month. They've got more operational hash rate online. They had the miners plugged in previous month, but they hadn't switched them all on. So we've now seen a greater proportion of miners switched on. Still about 1 exahash less than the miners that are plugged in. And really, we're expecting to see 12. We're expecting to see 12 in June and July. So they haven't really achieved that target. So that's a little bit of a point we'll raise with Ben when we get him on the channel on Friday. Efficiency has come down massively. So, start of the year, that was closer to 35. That was probably the lowest efficiency of all the miners. So an aging fleet. Now, with the impact of their, massive orders of S21, T21 miners, that's come down to 25 joules. And if I remember rightly, actually, they have a stack of machines that are going back to Bitmain, some T21s that weren't operating efficiently for them. So Bitmain are going to replace those. And I think there's a few other miners are doing the same. So there is, whereas Ben said on the podcast, there's the T21s have been operating really, really well. I think in South America, that's not the case now. So some of these miners are being replaced. That might be the reason they haven't got to 12. So in there, but HODL's over 1,000. And, as at the end of July, when the valuation's done for their updates, that was 65 million there, and they've got, a cash balance as well. So they have capital wise and treasury wise, no debt, got rid of the debt a few months ago. So that's a great position to be in. They're ticking along, but we want to see these targets hit. We want to see that 12 hit, then we want to see 21 by the end of the year. And Ben says 21 energized by the end of the year. So it's not 21 plugged in.
Yeah. And I just wanted to ask you, in your opinion, 21, is that doable still, Anthony, or do you think they may fall a bit short?
I think, you'd like to think it's doable because they've got probably the shortest amount of target to achieve. So out of those big 5 miners, most of them have got 20 exahash to get to. I think, in fact, CleanSpark have got about 10 to get to as well. So Bitfarms and CleanSpark, similar amount of exahash. Riot have got to get another 13 exahash online. IREN have got to get nearly 20 exahash online. Marathon nearly 20 exahash online. So, with Bitfarms, they have so many locations. It'll be a case of increasing hash rate at most of these locations, replacing miners, putting new miners in, adding miners. So it'll be a bit of a challenge for them. But Ben's adamant, and we'll get his view on Friday if he remains that case, because you want to hear in advance if they're not going to do it.
So yes or no, Anthony? Are they hitting?
Yeah, I think all the miners should do it. I mean, they've put their targets out there, and they don't want to be, if 3 or 4 of them are going to do it, they don't want to be the one that doesn't do it. The market won't like that.
You certainly don't. Now, you mentioned IREN. We've got a few questions. A couple of subscribers here saying they're making some big trades on IREN today. I wanted to get your take here, Anthony. This is one you've been talking about since they were half an exahash. IREN really came into their own this year. They announced that big ATM 30 exahash expansion. The stock absolutely took off. I believe they were up in the $15 range. They came out with 222 Bitcoin last month. They gave a clear projection showing Q4 this year, 30 exahash moving to 40 exahash in the first half of next year. Now, the sore thumb here, obviously, if you look to the left, $61,677 cost per Bitcoin, power alone, surpassing the revenue by about $300 per coin. Now, kudos to Dan. He's one of the most vocal, accessible CEOs on Twitter right now, or X. He came out and straight up addressed this, said, hey, you know what? This isn't great visually. It's not great economically. It was the issue related to some of these hedging strategies, and highlighted that in prior months and years, they've actually had negative electricity rates, which is one of the benefits of this fluctuating structure. So, Anthony, talk to us about IREN. Is this a buying opportunity? Do you think this is a long-term power issue, or just something more so an anomaly based on these summer months?
I just think it's probably maybe a wrong decision they made on this particular short period. So I said at the start of the podcast that IREN operate these 1 to 3 month hedging power contracts. And when you're in the summer where you expect prices to massively fluctuate, by having a hedge at a slightly higher price than market price, it gives you an opportunity to maybe sell some of that power when the power price spikes. And they did it in last August and did really well with the power sales. So much so that they effectively had no power cost. If you can see Dan's tweet there, last year they had a negative 8 cents a kilowatt hour. So it can go in both ways. At this moment in time, prices didn't move anywhere near where they were expecting to. They've been really flat, actually. So that's benefited this particular period, those miners that didn't have a PPA, because the power costs were lower. So Corsicana would have been a really, had a really good opportunity to buy the power at market rate there, because it has been fairly flat. Looking at the growth, I mean, the reason IREN is at the moment where they are is because when they announced that growth from 20 to 30, that was a surprise to everybody. I mean, we were saying 20 was going to be a challenge to get to by the end of the year, because at that time they were sort of like 6. So anyone that wants to grow 3 times their hash rate in less than a year is going to have a challenge. And they got to 10 in May, which was a month earlier. They've got to 10.5 now in terms of hash rate that's installed. And I believe that they'll get to 20 and 30 by those dates on the graph there. It wouldn't surprise me if they get to 30 before the end of the year, just to put a little marker in place to say that when we announce something, we deliver. Another thing is obviously, their efficiency is coming down. So at the moment, 24.3 in terms of efficiency, that will come down to 17 and then down to 16 and 15 when they get to 30 and 40. So that, when you get to 15 joules of terahash, you've effectively got a whole fleet of S21 miners in place there. So, we forget these mining companies have to replace their machines every so often with the latest machines, because, the machines have a life, and, 3 years might be the life of the machines. Those that are using immersion cooling may find that they get a longer life out of the machine because there's less environmental issues with mining, but IREN do everything well, and also the fact is, they've also got this AI business which they're trying to progress. They've got 5 or 6 little customers now, and we saw the AI cloud service revenue increase to 1.2 million. That was just under 1 million, I think, at the end of last month. So again, that takes their annualized amount now to just over $15 million. It's obviously a short way from the likes of Bit Digital and Core Scientific when they start getting revenues for the HPC hosting agreement with CoreWeave, but IREN are getting their revenues now. So remember, Core Scientific don't start getting their revenues for 2025. Some of these other miners who are operating HPC on a small scale are getting the revenues now, maybe learning how to grow and get the right ratio of machines at sites to deliver HPC services that can deliver the greatest revenue and get the best return. Now, profit margin, once you've paid for your machines, and that's the massive cost. So that cost isn't in that 98% there. You've got to buy these GPUs, and they're very expensive. I think the payback on the machines is like 2 years of revenues. But the good thing is the energy cost to deliver HPC is massively less than Bitcoin mining. So the energy margin on an operational basis, so revenues less the electricity cost, 98% margin, which is like, it's brilliant. I mean, that's like similar to the days of Ethereum mining for a couple of miners. So
yeah, quite impressive. Yeah. Hey, just a quick question on the efficiency, Anthony. So we had mentioned last year, prior to having the global average was around 35 joules per terahash. As we now get closer to 17 joules, essentially half, would it be proper to say a fleet of 17 joule per terahash machines versus a fleet of 35 effectively removes the impact of halving?
Effectively, yeah. If you've got a fleet in that particular instance there, you're using half the amount of power to mine the same amount of Bitcoin. So your cost of mining is half, and therefore, if you think about the halving, your rewards went down, so your revenues dropped, but your cost didn't. But if you're at 35 like Bitfarms and go down to 17 like IREN there, you're paying half the energy cost. So then you're matching them with the rewards. So you're in a better position, and that's what all these miners are trying to do: get the most efficient miners, and try and locate the cheapest energy as well. So it's a two-pronged attack. You can't just do it with one of them. So you're having 17 joules of terahash and your energy cost is 10 cents kilowatt hour. You can't make a profit. You have to have both. You have to have a cheap energy provider, and you have to have really good efficiency to make it work so that you're getting a decent margin when the Bitcoin price or the hash price is where it is today at $40 a petahash per day.
Yeah, makes sense. Okay, just wanted to clarify, and thanks for the explanation. So moving along to Core Scientific, we've got number one fan Gary here, Anthony. So Gary, I appreciate you tuning in and all the continued support for Core Scientific. Gary, along with the rest of the Core shareholders, are going to be pretty happy this week, Anthony, because they've now announced a 112 megawatt expansion to that really banner CoreWeave contract. So there was an additional 230 megawatts up for option or extension to CoreWeave. CoreWeave has converted on the first 112. As you say, who's going to bet against you expanding the additional 118? But that has not been disclosed yet. However, you've now amalgamated all of these different contracts, Anthony. You've put it into this table so you can see basically the different lines for each of the first 4 years and then year 5 through 13. So I'll let you walk through this table. But to me, I'm not a CPA, Anthony. You look at that after credit profit line, you throw a 10, 15, 20 PE on that. You're not even talking Bitcoin mining at all in this table. It doesn't take a real rocket scientist to do the numbers on this one. But anyways, you go through it, Anthony. You know the numbers better than most. Walk us through the Core Scientific announcement this week.
Yeah, so obviously the announcement for an extra 112 was highly anticipated. Maybe not necessarily with Core themselves, but with them announcing they were looking for it to deliver a total of 500 megawatts to the market, and they'd already delivered 270. It didn't come as a shock that the next announcement would include CoreWeave in that announcement too. So. Basically, I've took their original model of 200 megawatts, and I've now included the second and the third contract, and made sure that in the timelines now. So this contract or this timeline shows 13 years. The contracts are all 12, but if you look at the additional 70 megawatts and 112 megawatts, they sort of commence from 2026. So in 2026, you start seeing the revenues increase and the margins increase. Now, one good thing to point out, even when Core Scientific will receive a significant amount, I think it's 573 million. It was 405 million based on 270 megawatts, and I'm assuming they'll get the same rate of upfront capital, which they'll repay back in that early years. So if they're going to get 573 million in that first 2 years from CoreWeave to deliver these sites into a condition required for HPC hosting, they're still making a profit in year one of 30% after all their costs have been made. The difference with that and the Bitcoin mining is this year the Bitcoin miners ain't going to make 30% margins. So in those early 2 years, as they're repaying capital back, it's 30% margins. But then look at year 3, look at year 4, and then look at the last 8 years of that contract. You're into sort of 80% margins. So total contract value close to $7 billion, so $6.685 billion. Profit in terms of gross profit will be $5.3 billion. Then you've got the capital expenditure that you repay back of 573, giving you a net profit after all costs of 4.775 billion over that contract period. If you look at sort of like average profit per year, once you've paid back the capital, you're looking at $466 million a year in net profit. And that works out to $1.26 million per day, every day.
And Anthony, Just to clarify that, this deal that they've struck with CoreWeave handles all of the electricity pricing and costs themselves.
So we negotiate with the energy provider, the price and access to power that way. So all Core Scientific are doing is they're providing the facility and they're giving them the conduit, i.e. there is obviously all the power, the transformers, the substations are all there. But the conversation with regards to power pricing is with CoreWeave and the energy provider. So that will be a separate conversation. So really, you talk, this contract is just, it's just amazing. Now we said before, and we've said on the podcast, the Bitcoin price rises to 150, 200,000. Perhaps that conversation changes if you're then bringing in as much revenues and profits. It's not about just bringing in Bitcoin price. You've got to pay everybody and have an 80% margin, like this contract has after year 3 when they pay back the capital. So, when will the Bitcoin miners start achieving 80% margins? Bitcoin price would have to be significantly higher. So I think this is a good use of part of the 1.2 gigawatts that Core Scientific have as managed power. They're using 500 megawatts for this. There will be some ancillary power that's required to deliver the 500 megawatts. So it's not just 500 megawatts. So Core Scientific will be using probably just over 100 megawatts of their own power to make this contract work. But they've still got 600 megawatts to deliver at the moment to deliver self-mining and part of their hosted mining. And from listening to Adam on the last update, they'll look to review these hosted contracts when they come up for renewal, just to see if they actually want to carry on hosting or whether they can utilize those contracts and turn them into self-mining contracts. So Core Scientific, very much a self-miner. They've been the biggest miner for the last 3 years, biggest miner in Q1 of this year. Marathon just overtaken them in Q2 for the first time. So, a big miner, delivers consistent operational results every month. And this is just like icing on the cake. So, this was the biggest news story of the year, just got bigger, this week as we announced an extra deal there. And just flying through the operational update there. So, still mine 411 Bitcoin, hash rate over 20, efficiency fleet there, 24.7. That puts them in the top 3 or 4 miners in terms of efficiency. And they sold 401. They didn't tell us how much they're hodling. So now it looks like they don't have to sell maybe as quickly as we thought, or they kept some of their last days, last couple of days, Bitcoin hodl, and they have 10 days to which to sell it. So we can't speculate on that. But Adam did say that once their caveats have been removed with regards to debt, they can take control of their strategy going forward. So, all their warrants can be exercised. The CORZ W warrants, so individual shareholders have got the CORZ W warrants, and I've got some CORZ W warrants. Those have got to be exercised by, I think it's January 2029. Am I right in saying that? 2029, 2020, so 2027. And then the CORZ Z warrants have to be activated by January 2029. So it's sort of like 2.5 and 4.5 years in respectively for those warrants. So it's down to individuals. I mean, from CORZ position, they want you to activate the warrants now so that the capital payments for those warrants come into the company and clear all the debt and give them a cash runway of about 400 million. That's in the plan, but it's down to shareholders when they feel they can sell. So it'll be interesting when Adam gives his update. Is he going to update on how many of the warrants have been activated? What does that look like from a debt position? And just give us a little bit of insight into, what's the benefit of shareholders keeping hold of these warrants, or should they be just looking to exercise them now? We do know that all the notes were converted, so they had something like 260 million of debt through notes. They were converted in exchange for 45 million shares. So that's reduced their debt position considerably. Now it's down to just over 300 million in debt, and the CORZ W warrant will take that away in full and give them a nice cash runway. So it's as and when shareholders do that. But overall,
definitely will. Core Scientific also coming out with earnings today. You're going to be tuning into the live cast tonight. We were hopeful to get Adam on either tomorrow or Friday. We haven't heard back, so we'll do our best to have him on in a timely manner. I just wanted to kind of open up a question for you, Anthony. We'll move over to Bit Digital next. However, we're starting to see a variety of different strategies kind of emerge in the HPC AI space. So Core Scientific, you just described their relationship with CoreWeave, really de-risked. They don't have to worry about energy pricing. They don't have to worry about the build out. They just supply the shell or the building, the power, the infrastructure to support. Now, Bit Digital takes it a little bit different strategy. We've also got almost pure play or vertically integrated AI HPC players that are buying the GPUs themselves, like IREN, for example, building out their own facilities. So as we transition the discussion over to Bit Digital, I wanted to maybe pose that question to you, Anthony. Which of these emerging strategies do you think is best? With Bitcoin mining, we saw vertically integrated kind of take over as the best strategy there. Do you think that's the same with HPC AI, or which of these companies' strategy/deals do you think are best structured right now?
I think that it'll take something to top this deal with Core Scientific, to be honest. I mean, Bit Digital's deal is all about, I mean, they bought the GPUs, then they sold them on a leaseback position. So, and they lease the facilities and they have an energy cost. So for Bit Digital, it's all about margin. So they make a bit of a margin on each part of the business. And in terms of revenue for Bit Digital, I mean, they've, 4.3 million for their HPC contract in the month of July. Compare that to IREN's 1.2 million. And that 4.3 million grows in August now. So in August, they've effectively doubled the size of their HPC business unit. And it was 50 million annualized. It hasn't quite got to 100 million annualized. Sam explained that, when you do one great contract, the chances of getting that same deal going to the next contract, especially with the same supplier, they'll want a bit of a discount. So that 50 million is going to grow to 92 million annualized revenue from August, from when all the machines are included. So they'll be installed during August, and revenues will start in August. It might not be the full extra amount. But if you think about, from September, we're going to be looking at that 4.3 being closer to 8 million, close to 7.5, 8 million a month from September onwards. And it'll be above 4.3 million in August because they'll have started to receive revenue on that bigger transformation. So that's good there. When we get Bit Digital's information, we'll see far more about they'll probably break out the numbers for HPC. So through what we call segmental reporting, and we'll see their margins on the actual HPC AI business. And if they're as good as what they were in Q1, I think it was 62% margins. Bear in mind they did have to pay just over a $1 million sum back to the client because they hadn't certainly reached one of the targets. When you're doing these big contracts, there'll be payment mechanisms for achieving certain targets that you have to do on a monthly basis. And if you don't achieve those targets, there's sort of like penalties in there. And Sam said, they had to pay back $1 million. However, that hasn't occurred since then. So we'll see probably a bigger margin in Q2. Will that margin be enough to cover the issues with mining across all the miners having released their numbers post a halving? I don't think there's enough revenues and margin in the HPC deal to save them this quarter. But when you look at the next quarter, I think you might be getting closer to to where you need to be. But I like.
Quick question for you, Anthony. On the topic of that payback penalty, you mentioned how Sam described they had to pay back basically as a penalty for some performance gap in the first month. Do you think that's a real risk for some of these other companies that are getting involved in the space as they learn and grow into these tier 3 data centers and these HPC contracts? For example, Core Scientific, do you have any concern they won't be able to?
Core Scientific won't have that performance issue. So Core Scientific are providing the facility. CoreWeave will be buying all their HPUs, installing them, and having staff on the site to make sure those GPUs are working accurately. I mean, Core Scientific are effectively the sort of like the gatekeepers of the site, and making sure that all the services are provided, like security. Maybe there's a canteen. Maybe there's office space and things like that. And obviously they're making sure that the facility itself is fit for purpose. Gotcha. And there's no issues with that there. But with regards to this, the Core Scientific contract is different from every other HPC Bitcoin miner. What they're doing at the moment, it's just mind blowing. And they all want that deal. Everyone wants that deal. Believe you me, they'll come up with 5 reasons why they don't want the deal, but they really do want the deal. Because they're envious of Core Scientific. I mean, the company came out of Chapter 11 7 months ago, and now they're effectively, even if you just take the HPC side and use, like you say, use a PE ratio of 15-20, multiply that by the profit, and you've got an $8 billion company without the Bitcoin mining involved. So, it's definitely something to consider. But as I say, the revenue start in 2025, they ramp up in 2026. So we are talking ahead. Sam's very, he's getting them revenues now. He's been getting them revenues since January. So, and he's put them on every update since January. So kudos to him. In terms of Bitcoin mining, they had, another consistent month. They're only operating at just under 2.5 exahash. They've got a target of 6 by the end of the year. Fleet efficiency is quite good, 28.3. Anything under sort of like 29 is on the better side of where you want to be. And so, they want to go to 6, and they'll use the profits from these HPC AI business to deliver their Bitcoin mining growth. So again, another company that's doing HPC, but likes to, be remembered as a Bitcoin miner as well. And they also have a small amount of revenues through their Ethereum staking. So again, they've got a big Ethereum hodl, over 27,000 Ethereum, and they've got a 642 Bitcoin hodl. And if you go to their treasury is 211 million as at the end of July. And if you look at today's market capitalization of 350, if you're buying Bit Digital for 350 million today, and they've got effectively 211 million in the bank, you're only paying 140 million for that company. So their market capitalization is way out of control. This company's got zero, and I mean zero debt. When you hear companies have got zero debt, some of them have actually got small amounts of debt. Bit Digital have got zero debt. There's nothing.
Just devil's advocate there.
Yeah. Sorry?
Just to play devil's advocate, Ethereum's probably fallen off 25% since July 31st. So
yeah.
HODL.
Yeah, that's why it's clear to put in the update there that it's July the 31st that these numbers are taken from, which is their update. And go back 18 months ago, Bitcoin price was 15,500. So it's all about timing.
Timing is everything. Hey, Anthony. Now I wanted to get your take on Gryphon, because we've talked about a lot of this M&A activity. Gryphon has come out saying they have been basically in late stage discussions in 25 different meetings or situations with companies. Rob Chang also came out with a 6 exahash target this year, 10 originally reduced to 6. It looks to be M&A the only way they can make that target at this point. What is your take on Gryphon, their production in July, and their goal, or maybe optimistic goal at this point, of 6 exahash by year end?
Again, it's a small miner, 3 employees. They do everything remotely, so they've got an office, but they're hosted by another company. Everything's about a margin for Gryphon. So, they do actually operate quite well. They're sort of like, when you look at, we talked about Bitfarms and Hive, but Gryphon aren't that too far behind them in terms of their monthly production. And they've been putting out their own results for about the last 18 months. And, they've been in our group since February or March, and we've been showing their performance, and they're in the top, certainly the top half every month. So there's no no problem about their performance there. The trouble is with these and a number of the miners is they're so small in terms of market capitalization. The fact that when you're that small there, it's about raising capital. So how do Gryphon, if they're valued at say $50 or $60 million, how do they, get to a hash rate of 2 or 3 at that level there? The only way they could possibly do that is through M&A activity. Now, the update from Rob through the company is like, they're having these discussions. And so we want to, when we get Rob on the channel this month, we maybe want to hear a little bit more detail about these type of discussions, because, now we're in August. There's literally just over 4 months left of the rest of the year. So how do these discussions look like in terms of getting that hash rate to closer to where their target is? And if that's their second target, their initial target, you quite rightly said was 10. Now it's down to 6. And bear in mind, Hive Digital have been going for 7 years. They're not quite at 6 yet. So, this is going to be, a challenge on their own. But if he's having these discussions and they're at late stages, will be interesting to know. Give us a sort of feel of what type of conversations you're having, without going into all the specifics. But what does that mean potentially? That'd be an interesting conversation. But they've got 21 Bitcoin as a hodl, so they've got a bit of cash on the balance sheet there in terms of they've got some to keep the bills getting paid. So they're asset light in terms of staff. So there's only 3 of them, and we've said this before, all with massive experience in the Bitcoin mining industry, and certainly with the likes of Marathon and Riot Platforms, previous roles in those companies. So you've not got people who don't know what they're doing. These people know what they're doing. They've been at the sort of like the coal face, not reference to like Harding facility, but they've been sort of like at the Bitcoin mining space doing this work, so they know what they're doing there. So it should be a good update when he comes on the channel. Hopefully the results will reflect what they're saying in terms of production. But as I said, I mean, the warning for August is that most of these miners, even the likes of Core Scientific, when they release their results today, I'll be expecting net losses across the board for everyone, even those that don't hodl. The ones that do hodl, absolute red lines. But the ones that don't hodl, I still think it's going to be challenging for them to make a net income in this last 3 months, the sort of April through to June.
Yeah, agreed. I think it will be difficult. I'm just hearing my Bitcoin alert going off behind me, Anthony. 55,621 now. Shifting gears a little bit from Gryphon, I wanted to talk about Hut 8. So this is another miner that's really come a long way this year in terms of their strategy, their corporate governance, their outlook in the mining space. So I'll bring up the Hut 8 side here, Anthony. Maybe we can get your thoughts on direction under Asher's leadership. I know we got the opportunity to meet with both Asher and Sue in person in Nashville. They've now added a new CFO recently this week as well. So really putting together a great team here. It seems Asher's diversified strategy, all of the different hosting and managed services are coming together. How are you feeling in terms of Hut 8 Corporation?
One thing I'll say is, extremely pleased to meet Asher and Sue. I've met Sue a number of times before. We've been together at quite a few conferences over the last few years, so got to know Sue really well. And there's always somebody I can go to if I've got a question about mining. She knows the answer to most of the stuff. She's one of the OGs in this space. But it was great to meet Asher because we've interviewed him on the podcast 3 or 4 times this year. But when you get to him in person, and just remember the guy is 29 years old, so he's probably the youngest CEO in the mining space out there. We were all sort of contemplating was it Ben, because Ben looks about 12. But actually, Ben's not even the second youngest in the mining space. You've got Adam Sullivan, who's got that title at 33. Ben's actually 35. So, but to meet Asher, see his, he seemed really pleased to meet us for the first time, and I think everything he's done since he's been there looks like it's doing okay. I mean, from a service position, they have 3 distinct services. Though they have the self-mining, which is actually probably a small part of the company. Shouldn't be really focusing too much on the self-mining. It was a big part of Hut 8 original company because that's pretty much what they did. They did have the data center as well, but they were a Bitcoin miner in terms of self-mining. But USBTC, what they brought to the table is they had facilities, infrastructure, power, and they were doing like hosting and managed services. And the interesting thing we'll see is hopefully we want to see what the profitability of these services are post the halving, because it's all about margins. So you've got the power cost, then you've got the hosting cost or the management fee, and so everything's a margin. So this will be interesting when their results come out as to how they're going to manage. Are they going to is it still in their plan to get that self mining? Now they've got access to capital, sites, and they haven't bought any new miners in terms of self mining. If you look at the mining fleet efficiency, that's probably the lowest of all the miners that we do. 33.4 used to be Bitfarms at 35. Now they're 25 or 27, whatever it was. 25 was it? So these are now I've got the lowest efficiency of the fleet, which means when they're mining, it's costing more to mine Bitcoin. Yeah. So we need to get an update. We've asked consistently on the podcast when they're getting some new miners in there, and we'll do that when they come on the channel this month. So it's not just about earnings; it's about strategy. Where do they see themselves?
I feel like that announcement is coming. Hey, just a quick question for you, Anthony, from Jane. Obviously, self mining we understand, right? Hosting we understand. What is within managed services?
So managed services, simply, you don't own the site, but you go into a site and you basically run the facility on behalf of the owner. So you're managing everything, and you get paid for managing everything. It's not your facility, not your miners, but you're providing a service. So look at it like like a cleaning company in an office block. Yeah, they go into an office block, they get paid a cleaning contract to clean the office. They don't own the building. They don't own any of the equipment in the building, but they get paid for a service to keep it clean. Managed service for Bitcoin mining is you don't own the facility, you don't own the machines, but you are paid to manage the facility. So you'll get a payment for that there. So the interesting thing is we want to sort of see, is that margin good enough to make sure they're bringing up an overall cover. With a hosting service, you own the facility and you host clients' miners on their behalf. So you basically charge them a hosting fee and an energy fee, because you are the one that's got the contract with the energy. With the management services, you haven't got the contract with the energy. The contract and energy is in place there by the owner, but you're managing everything. You just get a management fee instead. That's certainly my interpretation. We'll get Asher to confirm that, but that will be my understanding. You don't have any ownership of anything, but you have the basically you're in charge of that facility. And actually, if you remember, they had Marathon Digital on they were doing managed services Marathon Digital, and Marathon Digital wanted to sort of take ownership of what they were doing, and so basically they cancelled the contract with Hut 8 by 1 year, brought it forward 1 year early, and had to pay $13 million to Hut 8, which was actually the contract value for that year. So by taking ownership now, they basically forewent the whole year's management service contracts and gave them that 13 million.
Now, Hut 8 also has their data centers with the Interior Health contract here in Canada and BC. Where would that fit in here, Anthony? Would that be under hosting data centers?
No. That's a separate business. I mean, I haven't put. I mean, on these tables, I mean, really, it's supposed to be about self mining, but
gotcha.
Okay. I've just added a couple of lines just to give a little bit more flavor. These miners are more than self miners now. A lot of them are doing something else. So, if I had a big enough sheet, I could list everything there. But no, they've got data centers as well. So they've got the 5 data centers that they purchased. They've also got, some of their own GPUs that they had from the Ethereum mining days. And, I suppose it's like steady revenue. It's not massive revenues. It's more steady revenues, and the margins are reasonable. So, yeah.
Gotcha. Okay, makes sense. So moving along, you guys, make sure you get your questions in the chat here. If you've got any companies we haven't yet talked about. Anthony, another one that we discussed on the podcast this week was Marathon. So they came out with a big month, proportionately to what we've seen over the last few, kind of reminiscent of what we saw in December there. I'll bring up your summary or analysis here for Marathon. 692 Bitcoin. So a very strong showing this month. You can see their fleet efficiency pretty healthy as well. And the number that really stands out, the HODL value, again, as of July 31st. So this number has definitely pulled back slightly, but in excess of 10 figures in their HODL now. Pretty incredible, hey?
Yeah, I mean, this was, last couple of years, we've had about two, what I say is two decent updates from Marathon in terms of monthly production. I think it was May last year, and I'm going to say definitely December last year, because December last year they mined 1,853 Bitcoin with less hash rate than they're showing there today. So, nearly three times as much. Now, difficulty has impacted the minership. And if the people don't realize how much difficulty impacts miners, I'm producing an article this month which will highlight the impact of difficulty to every miner in terms of production. So wait for that one to come out. But I'd say this was a good month for Marathon. Great number to mine, big increase in what they had in the previous month, more than 100 more than they did in June. So that's a good point straight away. Installed hash rate up from 31.5 to 31.8, so a little bit of increase in there. They're still going to get to 50 by the end of the year, so still another 18.2 exahash to find. And where they're going to put that. So I imagine Marathon will be replacing a lot of their older machines with these new S21 Pro machines. And that way, you don't have to increase the facility size. You just have to change the miners, and you get like twice the hash rate. And you're growing hash rate just by changing machines for more efficient machines. So, and bear in mind, they've got a contract with Auradine, who are doing, effectively their own miners. And when we start to see the efficiency of those miners in the same way that Bitdeer are doing their own miners in house, we could see potentially that efficiency reduce down to really, low numbers like we saw for IREN, certainly in sort of like the low teens. But the race is on. So in terms of production, I'm gonna say now we've got one or two miners still to release their results, but Marathon will come top of production for the month of June. 25.2 is better than Hive and Bit Digital did by a little bit, actually. So, the only thing I'm putting it down to, it's not in terms of Bitcoin mining. I'd put it down to transaction fees through their Mara pool. Maybe they were able to get more transaction fees, and transaction fees are paid in Bitcoin. So maybe they benefited from that there, because there's only in December they came top, and now they've come top this month as well. So it doesn't happen regularly. They'll still be, for the year to date, they'll still be something like 12th or 13th in terms of performance over the whole period. But this was a good month, and we just want to see this month every month. I'm a shareholder, you're a shareholder. I'm just, again, in the same way with some of the Riot updates and the Marathon updates baffle me. Some of the news they put out is really good. They got into Abu Dhabi in the UAE and set up there. They're working in Paraguay. They had, obviously, they're the biggest mining company in terms of size, market capitalization.
There's a lot there.
Anthony, position as well. They're everything's big, but like you say, that Bitcoin hodl there will be at least 200 million less at today's prices than it was on the end of July. So
sure,
still a big war chest. If they want to go out buying things, if they want to go to the supermarket and buy other miners, they can pretty much buy nearly everybody. So
now, Anthony, you mentioned Riot in comparison to Marathon. I know you just put out a great article for Compass this week, comparing these two mining giants, pure play mining giants, specifically based on what we've seen in their earnings. So I wanted to pull out a few charts. There's 4 charts here, a very detailed article kind of comparing and contrasting these two miners as they jockey for that top position in the sector. So maybe we'll take a break from the individual miners. We'll move into this analysis section between Riot and Marathon. You can walk us through the slides from your Compass mining article here.
Yeah, so this is just really highlighting the financial performance from the last 3 and 6 months. Interesting points to note. If you look at the last 3 months and look at the net income, which is the third line down, net income, or if it's a loss, it's a negative figure. Both of these companies had a net loss in the last 3 months. So Riot, 84.5 million. and Marathon nearly 200 million loss in the last 3 months. Why was that? Well, under FASB rules, your holdings of Bitcoin are valued at the value they are at the time of the results. So when you think about what the value was at the start of the period, which was 71,000, at the end of the June, Bitcoin price had got down to 62,000. So all these miners with a hodl are taking a $9,000 unrealized loss for every Bitcoin on the balance sheet. And Marathon had thousands of them, and Riot also had thousands of them. So big drops. And actually, I've put the number in there. So Riot took a hit on the Bitcoin of 76 million, Marathon 147 million. So that was part of the reason for the net loss. The other two main reasons are actually on the screen as well. So depreciation. So these companies are buying all these mining machines. They're using their ATM to raise capital, buying these expensive machines that then need to be depreciated. So depreciation is a real cost, and it's a real cost. And although it's not a cash cost, but it is a real cost. Stock compensation as well. I wanted to highlight stock compensation. People going, ballistic at Riot Platforms, 32 million in the last 3 months, or just over 64 million in the first 6 months. But then again, Marathon, you look at the 6-month position for them, 80 million in stock compensation. So it is getting a little bit out of hand for some of these miners. Be interesting to see what some of the miners deliver in this next few weeks when their earnings come out. If you look at one of the key metrics that people, are starting to look at is these companies have to be, cash flow positive. So your revenues that come in from your mining, less your costs that are physical cash costs. So you've got to pay your electricity bill, you've got to pay your staff, you've got to pay the G&A costs. So travel, subsistence, professional fees, legal fees, marketing, sponsorship. All these costs are real. You've got to pay those costs, otherwise you don't get those services. So when you look at the 6-month position in terms of cash flow, free cash flow, Riot are cash flow positive 26, nearly 27 million, Marathon nearly 107 million in terms of free cash flow. So both companies at the moment, we talked about hash price and what would it take for miners to stop mining. These two companies look like they're okay at the moment. They were managing on the price there, but however, the price now at the moment, hash price, is lower than it was when these results came out. So them amounts there will start to be eaten away, and so these companies will have to work out. They'll have to get even more efficient, or they'll have to sort of like consider what their strategy is going to be if the hash price stays where it is at the moment. This chart here is basically. Sorry, can we go to the next chart?
Yeah, I was just going to say, Anthony, I put the link to the Compass article in the chat there, you guys, if you're wanting to follow along. Next chart here, Anthony. Sorry, coming up right now. Here you go.
This is just right. So this chart really is just some of the metrics from 2024. So the amount of Bitcoin mined, the amount of hash rate they've got installed, what their end of year hash rate is going to be, average BTC mining per month. So we've had 7 months of the year. If I look at all the months, add them together, divide it by the 7, what's their average Bitcoin mine per exahash? Bear in mind, we've just talked about Marathon are going to be top in July at 25.2, but for the year, they're at 40. Now I can tell you now that Hive and Bitfarms will be probably closer to 50 in terms of average. That's how far these two are behind the top two. So even though it looks good, 39.8 compared to July's at 25.2. Both of these miners, in terms of production throughout 2024, have been, pretty much bottom of the table. Fleet efficiency, bang on the same, 24.5. That's really good. Only the likes of CleanSpark can better that. So at the moment, and there's a few in that 24 point something group. So we know there's a few of the miners in there. So these two, because of the size they're growing to, both of these are growing by another, effectively another 15, 20 exahash this year, all with new miners. That efficiency number is coming down considerably.
Yeah, it is. Do you have any concern of either miner hitting those targets, Anthony, between the two here?
No.
Now, moving into the next table, great answer. Yes, no answer there, Anthony. Walk us through this one. Another great slide to compare and contrast these two.
This one's looking at really, their margins in terms of self-mining. So Marathon do a self-mine. They're all self-mining business. Riot, on the other hand, have a self-mining and they've got an engineering business, and then slowly getting rid of the hosting business. So now it's down to a small amount of hosting, which they are doing while they go through litigation with some of these miners that they gave notice to. So basically, the good thing is the companies do segmental reporting, so they report the businesses separately. Now, when you get down to the G&A costs and other costs there, because they have two businesses, Riot, I've basically separated out G&A costs based on the revenues they receive from each of those businesses, because you'd expect a proportion of revenues to go to their engineering, the proportion of costs to go to engineering business as well as self-mining. And actually the self-mining is over 85% of the business. So 85% of the G&A costs and other costs, and the other income. So again, so they don't get the full amount of income. So that income goes across to the other business as well. So it's not all about, reducing costs to make sure their self-mining is really, really good. No. All the costs are shown here. It's just the proportion that we use for self-mining. So if you look at gross mining profit, we do know that Riot traditionally have one of the lowest costs of energy, and Marathon have a hosting cost. So you're not going to get the same amount of mining profit from these two companies. It's when you get down to the net operating levels, you've covered all the costs then. So some miners can put certain costs in their direct costs. Other miners will put it in operating costs. So there's not a lot of consistency across the miners. But when you get down to the bottom level, operating profit percentage, every cost has been included at that point in time. So, there is transparency that way there. But in this case, you can see from a cash basis, this is only the cash. So we don't look at depreciation. We don't look at stock compensation. We've talked about them on a previous slide. So this is about, are you mining, paying for your energy, and then paying for your costs, and making sure your mining is running as it should be. And in this case, the great factor to look at, the great metric is the cash cost for each Bitcoin mined. And during that first 6 months of the year, it's cost Riot 47,400 to mine Bitcoin, and Marathon 54,000. So Marathon pay slightly more, and that's not to be unexpected. They do pay hosting fees, so they are going down the route now of, I think at the moment they're 54.9% infrastructure and the rest hosting, and they're trying to get that 54% close to 80 by the end of the year, because it will reduce costs for them in the future. They know that now. It took them a few years to realize it, but they know infrastructure was probably the way to go. And as a shareholder, I'm pleased they're doing that now. So that's a slide just to show you about mining margin. So at the moment there, Right, looking really good. When we start getting some of the other numbers from the companies, we'll start increasing this comparison. I'm expecting TeraWulf to be good. I'm expecting CIFR to be another one that's going to be good. Generally, we'll see what Bitfarms is good. IREN, it's going to be before the issue with the energy price. So again, that could be a good one. So it'd be interesting when we get quite a few of these miners to compare, and we'll see that as we go through August. Next slide.
Yeah, I really like that cash cost per Bitcoin, and we would expect that to go down as economies of scale, I guess, are realized at Corsicana. Last slide in the comparison here, Anthony. Then we can jump over to the Riot page individually. But I wanted to give you the chance here. Yeah.
This is a great slide to show the strength of the balance sheet. Now, both of these companies have got very strong balance sheets. Riot has always had a very strong balance sheet because they've had, very little debt. I mean, if you look at the debt line there, 23 million for Riot, 365 million for Marathon. Marathon's was over, close to 800 million, but they basically they swapped some of their debt for shares earlier this year, and so that that's why their debt's now reduced to that figure there. But really strong. We look at the current assets and current liabilities. So current assets, those are the assets that are liquidated over the next 12 months, and same with current liability. Anything that's going to be paid in the next 12 months goes in there. So you want to make sure as a business you have enough money coming in the next 12 months to pay all your 12-month debts. And both of these companies easily cover their current liabilities. So Riot have got it covered 7 times in terms of money coming in, money going out. 7.65 more coming in than going out. It's really positive. Marathon 3.75, and believe you me, anything above 1 is good. So these two, you could argue, both of them, probably too much in terms of current assets, and maybe should be using that money to deliver more in the company. So there's an argument as an accountant, are you doing that? But then you could argue in this type of environment with Bitcoin, do you want to have some cash there available should things happen? So great current ratios for both. Then we start looking at sort of like the enterprise value of a company. So the enterprise value of a company takes the market capitalization, it adds any debt to the market capitalization, and then starts removing any of the cash or cash equivalents. And in this circumstance, I've used the Bitcoin HODL as a cash equivalent because it should be. If you can liquidate your Bitcoin, I can go to my phone now and sell my Bitcoin in the next 20 seconds, whatever like that. And so that means I can liquidate that. That money will go into my bank account. So I'm treating Bitcoin HODL as money that you can liquidate. So when you get down to an enterprise value, you can then see if you have an enterprise value for every miner, you know what you're buying then, because every miner is valued on the same level playing field. It's no use saying the market capitalization of Marathon is 5 billion and the market capitalization of IREN is 1.6 billion, when Marathon have got 1.2 billion in Bitcoin held on the balance sheet. So enterprise value looks at that value and takes it off the market cap to bring it down so everyone's on the same level. And so when you've got everyone on the same level, and then you've got you can look at things like the hash rate or the megawatts and determine a valuation based on what these companies are utilizing. So for this scenario, I've used the current hash rate and the future hash rate and divided that into the enterprise value just to see what the valuations of that hash rate is by company. And so for Riot at the moment, and bear in mind, the enterprise value was done when the article came out, which was at the weekend. So it doesn't take account of the share price change this week. So the value for hash rate currently for Riot is 81.3 million per exahash, and for Marathon 126.9 million. So if you're looking at it from a hash rate perspective, Riot looks a more valuable company in terms of you're getting more for what you as a shareholder than you are with Marathon. Looking at future hash rate, because the market will anticipate where these companies are going to be at the end of December. So if we look at the end of the year and say, actually, the share price there reflects where they're going to be at the end of the year. So let's use the end of the year hash rate. So we know that Riot are going to be 36 by the end of the year. Marathon are going to be 50. So that 36 takes Riot down to just under 50 million exahash. And with Marathon achieving 50, that takes them to 80 million per exahash. So if you're buying shares in Riot or buying shares in Marathon, that's what you're buying in terms of your hash rate there. Now, we know there are a couple of miners that are even lower than that there. So go and look at, use the same analogy for Hive Digital. You probably end up with something like 20 million per exahash. I mean, it's ridiculously lowly valued at the moment. But, we're looking here at two of the biggest miners in the world.
And interestingly, Anthony, just to call out, if you look at the current enterprise value to hash rate, the 81 to the 127, we've often used the floor price of 100 million per exahash in a lot of our discussion. It's right kind of the midpoint between these two companies, which arguably are pretty well set up and oriented towards Bitcoin mining. So just wanted to throw that in there. That was an interesting observation from my side.
Absolutely. If you go back 2 weeks ago, I'm more than certain Rights would have been 100 because the share price would have been significantly higher. We've seen a pullback on share price. I mean, right at the moment, it's hovering around $8 a share. Well, only a couple of weeks ago, it was $11 a share. So think about that 30% increase and apply that to the value there. And you sort of get probably close to 100. And that's how we come up with that 100. Quite a few of the miners were in sort of like these sort of like, 9 figures, 100 million plus. It's only the smaller miners that have, and there's a reason for this, with a smaller miner, yes, they have got really low value in terms of hash rate. But the reason is that it's the growth. They've got no growth beside them. These are going to grow massively. Riot, if they take over Bitfarms, in the next year or so and get their targets, they're going to be 100 million by the end of next year. So, or close to it. With all the things that are going on there, they're going to be, well over 50 exahash and plus Bitfarms at 35 next year. Plus they've bought Block and they're increasing that. It's going to be a behemoth of a miner.
We'll go into Riot in a second. I just wanted to bring up this market cap chart for you, Anthony. Two things you called out earlier: Bitfarms falling below the $1 billion market cap. And in addition to that, talking about kind of the spread we're seeing from the top miners versus this bottom group. You talk about $100 million floor per exahash. However, you look at Soluna, SATO, Gryphon, Argo, Hive, you mentioned, significantly lower than that $100 million.
Remember Hive's market cap there, 330, when we come on to talk about Hive. See what their Bitcoin hodl is, and take that away from because Hive have got very little debt. Take that away from their 300 million, and then you're going to have a figure, well under 200 million, and then look at their hash rate, and you're going to have something like 30-40 million a hash rate, and that's that valuation compared to some of the others is significantly lower.
Yeah, why are we seeing that, Anthony? Why are some companies achieving such a higher premium?
Because they've got the growth. I mean, if I said to you now, we've asked this question already on the podcast. So, those 5 big miners, who's going to make it this year? I said all 5 will make it, or they should make it. All 5 should make it. Then ask me, are Bit Digital going to get to 6? Are Hive going to get to 8? Are DMG going to get to 2? And I think they've got more challenges than the big 5.
Gotcha.
That's the whole. It's about ability to grow, and you've got those in that circle, and add Bitfarms to that circle because they've already paid for their growth to 21. Those are the haves, and the ones below are the ones that have nots. It's a struggle. The gap between Bitfarms and Bit Digital there is over $550 million for the next size miner down.
Now, I will say, Anthony, that uncertainty in that have-nots group, that's where opportunity can present itself if we do see a big move in Bitcoin. So we're not saying these companies are down and out by any means. We're just saying...
we'll just say, sorry, I'm glad you got it there. So Bit Digital, 337 million market capitalization. As at the end of July, they had 200 million in treasury. So that's $137 million for a company that's delivering 92 million in HPC contract and probably about 50 million in Bitcoin mining. So tell me where those two numbers there, how does that equate to that market capitalization? Please put in the comments, because I'm finding it hard to believe, and I can understand Sam's impatience with the market. They're just not recognizing it. Hive also have now got, I think, 10 million plus in annualized HPC revenues. That doesn't seem to get any notice whatsoever. So, it is a challenge for these miners that should be getting a higher valuation because of what they're doing. But I think Bit Digital and Hive Digital have definitely got a case to answer to in terms of why are these big companies getting significantly more premium and these are getting left behind. I mean, we already said Hive are probably they're so close to being number one this year. There's a hair between Bitfarms and Hive in July, and for the year to date, there's a hair between them. It's not. I had to go down to like 4 decimal points to get the miner who's going to come out. Honestly, seriously.
Okay, well, let's talk about Hive. Let's get into Riot. We've had a few comments, and then we'll get into Hive right after that, Anthony. So I'll bring up Riot here. We just went through a comparison with Marathon. Really, the two big guys here duking it out in the space. We had Jason on the podcast to talk about Q2, a great interview. If you guys haven't had a chance to see that, make sure you take a look. They also announced their beneficial ownership is now creeping up towards 17% in Bitfarms. So obviously the poison pill has been lifted to 20%, or the customary percentage for these type of transactions. We expect Riot to continue to buy up to 19.9 or whatever that threshold is. We've talked about the Bitfarms situation already. We've talked about their performance versus Marathon. What else would you like to talk about in terms of Riot here, Anthony?
It was a good month in terms of everything, really. So great increase in Bitcoin mined, but when you add 4 exahash to your operational hash rate, you're going to get a lot more Bitcoin mined. So operational hash rate 15.5. Installed hash rate 23.3. So obviously they're adding the amount they've for the block on top of that now. So that's including that amount there. Current operational power is actually 960 megawatts because the block 60 megawatts isn't including that number, and therefore total global contracted capacity is 1760 if you take block where it is today, or 1800 if you take block where it is at the end of the year. So fleet efficiency, again, that's 24.5, not 27.7. So that's updated on the article slide there. I thought I'd sent you through the new Riot one, but that's not the up-to-date Riot slide. In terms of, there was a couple of amendments. But key things to know. I mean, it was a good month in terms of mining per exahash. So Marathon had a good month. Riot 23.9. In terms of what they do normally, that's really good. HODL 9,000. They're not selling anything. They're just adding everything to their HODL each month there. So now they're clearly by about 600 Bitcoin, the second biggest miner in North America with HODL. And based on the July 31st valuation, 627 million. They've probably got 300 or 400 million in the bank. So you're looking at over $1 billion in treasury for Riot. So again, everything ticking the box at the moment. We love the site, Corsicana, all immersion cooling. That's a positive. We've highlighted how bad their production's been over 18 months, but this is green shoots actually coming through. The last two updates I think have been better. August I want to see even better. Not as much sales of operation for their power this month as expected. I think if you look at what they were doing last year, it was into like 10 plus million in July. I think it was probably close to 3.5 million in July this year. But in fact, I've got the power sales Bitcoin equivalent there was 53. So if you look at what their sales were and convert that into Bitcoin as at the end of the month price, it's an extra 53. So if you wanted to do a comparison, say with likes of Core Scientific or CleanSpark, then you can say, right, I got closer to 423 Bitcoin because they were turning off and selling power that period. But I think that's I think it's a good update this month here, and I'll highlight that. I highlighted Marathon was a good update. We're trying to be, impartial. When it's good, we'll say it's good. When it's bad, we'll say it's bad as well. And believe you me, right, I've had enough bad ones.
Yeah, it's nice to see things really coming into full steam there in Corsicana and in the performance numbers. Sorry, Anthony, for getting the outdated slide. I thought I caught that, but I'll try better next week. Next one is Hive here. You've mentioned Hive a number of times already in today's discussion. We're up to 110 viewers now, Anthony, so continuing to pick up steam. You guys, we should have 110 likes on this video minimum right now if you're watching. Getting some great information from Anthony. He made all of these tables over his weekend for us here, you guys. So throw Anthony a bit of appreciation for that and for the article. Hive, Anthony, another great performer, really looks to be a value play in the mining sector. They also highlighted the importance of the Morgan Stanley wealth advisors implementing Bitcoin as part of their recommendation strategy. Really exciting times, and looking forward to having Hive on to talk about Q1 here actually in the next few weeks.
Absolutely. Just a consistent update from Hive, not used to be one of the biggest miners. Go back to 2021, Hive were earning more revenues than Marathon and Riot and all the companies. They were literally the biggest revenue earner in terms of mining, and they were doing a lot of Ethereum mining, which was really profitable for them. So, haven't grown like some of these other miners have grown, and they'll be looking at that themselves as to what they could have done differently. But we've seen them just recently sign up to go into Paraguay with a 100 megawatt facility down there. So that'll deliver 6-7 exahash, hopefully. That'll get them over 12 by July next year. So the challenge will be, is what will their target be? I think their original target of 8 exahash by the end of the year. It's unlikely they'll get to 8 because I'm assuming the exahash will come online towards the end of that year in Paraguay. I can't see machines being energized in the first 6 months. You've got to break ground and everything over there. But they have got the agreement signed now, so that's a positive thing. But they do things on a sort of like a scale. They do think more about the impact of cost. So you can always expect Hive to have the lowest G&A cost, the lowest stock compensation of all the miners. They don't pay themselves pop star wages. They do things. What they do is they do things really well. They keep the costs down, so their G&A costs as a proportion of revenues will be the lowest of pretty much all the miners. and we'll see that when we get the results through this month. Efficiency is in a good position there. They've been replacing a lot of their fleet this year, so they haven't grown hash rate, but what they've done is they've replaced older miners and got some new miners in there, a lot of the S21 miners, and they're still receiving S21 miners as we speak to now. So I think with the miners they've actually had delivered, their hash rate should be about 5.5 exahash. They're showing operational hash rate of 4.9, but I think even a couple of months ago it was over 5. So I think they've got about 5.5 exahash when they're fully switched on. Operational power 142 megawatts, but we know they've got this 100 megawatt site down in Paraguay, so that'll increase there. The hodl for me is a good size, 2,500 there, and a great value. So the value of the hodl 163. Remember I said to you about that market capitalization for Hive. Take that hodl away from that there, and then start looking at what your value of your and they've also got cash, which I haven't put in that figure there, but they'll have a significant cash balance as well. Their hash rate price at the moment, so if you look at Riot, which was 40 million cheaper than Marathon, they'll be 40 million cheaper than Riot in terms of valuation. So do get overlooked, but people are looking at these big 5 miners and thinking they're going to grow extensively, and some of these other miners are going to struggle to get there. I mean, they'll get to 12 next year when IREN are hitting 40, and IREN were half an exahash when these were probably 2 or 3 exahash 2 years ago. So that's the turnaround. It's timing in the market. It's having the right strategy. They haven't utilized the ATM like some of these other companies, and people can say the ATM it's dilution shares, but look at what some of them have done. IREN and CleanSpark have utilized it really well in the last 18 months and managed to get their valuations so that shareholders have benefited. So CleanSpark shares were $24 in March, and they were probably $3 or $4 late last year. I mean, from October to March, they grew from 600 million to 4 billion. So shareholders benefited from them ATMs. IREN was the same. I bought IREN $1 a share early in 2023, and they got to $15.50. So shareholders again benefited from there. Doesn't matter what you bought in an IREN. If you were selling at $15.50, you were making a nice profit. Pulled back now since then over a number of factors, but people are still quite positive about IREN. They probably shrug this energy strategy off and come up with a better plan going forward and get back to what they do normally and grow the company. So. But from a Hive perspective, it's a good update. But we always get a consistently good update from Hive, and we get a good update from Bitfarms every month. So can't really fault them that way.
Yeah, no, it makes sense. Now, speaking of consistent updates, I wanted to jump over to DMG quickly. We've still got a number of the big profile miners to come, you guys. So CleanSpark, CIFR, Bitdeer, super interesting, and of course TeraWulf. DMG. I wanted to highlight another feature on the website quickly is the leadership function. So you can see Sheldon Bennett, CEO of DMG. They're scheduled to come on September 3rd to talk about earnings here. We've been continuing to enhance the website, you guys. So earlier we talked about the gallery feature, the live stream news feature now, and leadership as well. So another great addition to the site. Now, Anthony, I'll give you a second to talk about DMG if you have any updates. They have yet to put out their monthly production, but any thoughts on DMG currently?
No, I'm waiting for this update because obviously they increased their hash rate to 1.7. So I want to see what the production looks like. We've got the new S21 miners going into their facility in Canada, which is not that far away from you, Bryce. So that'd be interesting. But yeah, I mean, it's good to highlight. We've got all their details on the website, and we're constantly updating that. So if you get a chance to have a couple of minutes, go through, tell us what you like about the website, tell us what you want to, any information that you want to see on there. We can maybe look at getting it. We just spent sort of like 7 months this year growing an idea. It started off as a conversation. It's now become the second website that we've designed over this period, and we're just trying to improve it on a daily basis. We've got a team in the background who are basically following our instructions as we see things and want things to be improved, make sure that it's great for the user, which is you guys. So have a look at the website, look at some of the various statistics on there, about the education on there, some of the events that we're putting on there. So if you're unsure about, there might be an event happening near you, we're putting those events on the website there so you can have a look. All the information about your favorite miners are on there. And
yeah, it's a great look. It's a great look. I just switched over to the gallery feature here as well, showing TeraWulf. So speaking of TeraWulf, Anthony, we'll jump into their page as well here. I know we've got a number of the Wulf Pack attending the call here. Now, interestingly enough, we have Patrick Fleury coming on to do the Q2 results with TeraWulf. He put out a great quote on the right-hand side here, talking about exactly what you say, Anthony. The most important part of being in the mining business is vertically integrated, having a very low cost of power, and then talks about the 3.2 cent blended rate that TeraWulf enjoys. So open it up to Wulf here right now for us, Anthony.
Yeah, I mean, there's sort of like, I'm going to say there's like 4 miners that really benefit from the cheap power, and those are TeraWulf, CIFR, Soluna, and Riot. And it's about the strategies they've used. TeraWulf have been, fairly consistent in the terms of they've got a great contract at Nautilus where they get the nuclear power at 2 cents a kilowatt hour. And then for their Lake Mariner site, they have they're using the market price, whatever the price is at the market. We talked about, miners in Texas using the market price as well. So they use the market price there, but they have this blended price. So you can see there 3.2 cents, and the majority of their hash rate is at Lake Mariner. So it means that the price at Lake Mariner isn't that much more than that figure there, because most of their hash rate's there. So they're getting a great deal. Anyone that's paying under 4 cents a kilowatt hour is doing really well at the moment. If you're paying above 5 cents, and Marathon will be paying more than that because they're hosted, so they'll be probably paying closer to 6.5 cents at some of their sites. But 3.2, and having a fleet efficiency, again, 24.6 is in that top 3 or 4 miners. It means you're matching the 2 requirements: cheap energy, low efficiency, or high efficiency, however you want to look at it. But the low efficiency, the better. And it just goes to show that they even put their cost to mine a Bitcoin in terms of energy, 36,000. I think I'm trying to remember, was it IREN was at 61,000, and so that's $25,000 per Bitcoin, and they mine 195, less than one of their peer miners. So one good thing they achieved, I'm saying another good thing they achieved in July was their installed hash rate. They got it over 10, so that was a target for June. And they're still obviously curtailing because the average operational hash rate for the month was 8. So we want to see that number increase, or we want to see the effect of the power credits in their update to highlight that they were switching off and they were getting a benefit from power credits, and we can do the equivalency in terms of Bitcoin to see if it was beneficial from that position as well, because they sell on a daily basis, so it's not like the hodling. So if you're going to switch off your machines to sell power, you want to make sure it's better than the actual margin you would have done by keeping the machines on. In terms of growth, they're looking to grow to, I think it's 13.3 by the end of the year. So again, maybe not as big as some of those 5 mines we already spoke about, but certainly growing considerably and, aiming to move into that top tier. Arguably you could say now there's really only 2 tiers, and we've already said those that have and those that haven't. TeraWulf is certainly in those that have. Obviously from June, significantly, a milestone occurred when they paid off the debt. And so there's no interest payments in July. So again, we'll see their results come through. They won't be brilliant results when they come out because, they had debt during those 3 months of the reporting period, and it was a significant amount, and the interest payments will be fairly significant. So, that's just one of those things. You're going to get hit from the low Bitcoin hash price, but your costs, if you've got a company with no debt and you have debt and you're paying interest, you've got that additional cost to pay as well. So, but future quarterly updates should be really good for TeraWulf because they've got everything in a row now. They pretty much rose from the ashes in the same way that Bitfarms did. So both companies had well over 100 million of debt last year. Both companies got down to 0, and that is 0. And I think the shareholders, if you look at the companies that are in the eye of shares at the moment. Bitfarms and TeraWulf consistently seem to be called out as with a great following.
Anthony, I know TeraWulf has a relatively high percentage of insider ownership, in excess of 40%. What does that mean for a company?
It means that they've got they're all focused on making sure the company does well. So it also means that if they want to vote certain things through, they've probably got most of the threshold to do that. It also means if a company wants to try and take over TeraWulf, there's an unlikeliness to happen because there's so much insider shareholders. I mean, you know, we talked about Bitfarms having like 2% insider holdings. TeraWulf is probably closer to 40%, like you say. So when you've got that amount, you don't need many shareholders to stand with you and support your proposals. You know, you could probably call on a couple of institutions to say, you know, this is what we're doing over the next couple of years, but we need this, and done now, and you'll probably get those shares to support you as you take it through there. So everything's, you know, really good. And also they own the energy company, so that's, you know, Beowulf is owned by a couple of the directors, and so, you know, they've got the full vertical integration, and yeah, I think there was only one thing that shareholders were ever concerned about, and that was the debt, and that's gone. So there should be no concerns now. We want to see the growth, obviously. We want to see the growth increase in line, you know, with some of their peer group. But we'll see what happens this year and next year. One thing they are moving into, and they're moving into well, is the HPC space. So they've got a couple of models set up there, 2 megawatt model, and I think a 16 megawatt model that they're going to be using for HPC. A lot of rumors at Nashville say that the next mine to come out with a big customer was probably TeraWulf. So that'll be interesting to see if that materializes. But yeah, I mean, they're a popular share. We like the Wulf pack, and yeah, good update.
Yeah. Now we're going to transition over to SATO and Soluna. We'll go through those and then finish off with CIFR and CleanSpark. Anthony, does insider ownership play any role in your investment decisions at all?
Not particularly. No, I'm not looking at insider information as like the key thing. There'll be a lot more metrics.
Insider ownership.
It's for consideration, but not. No, I've bought TeraWulf shares before.
Gotcha. Now, SATO Technologies, we were actually fortunate to sit down with Romain for a great discussion in Nashville. I threw up their share price. It was up 3.5% today. It actually held up relatively well throughout this little pullback we've seen, hovering right around that $20 million market cap over the past few weeks. They mined 11 Bitcoin this month. The Canadian miners tend to have fairly strong operational metrics, but I'll hand it over to you to talk through SATO Technologies and then Soluna here.
Yeah. So yeah. Well, again, these are some of the smaller miners. So if you look at operational hash rate there, probably about the size that IREN was back in November 21 when they approached me. So they're operating at 560 now. They did have a fire at their facility in June, and so that wiped out probably about 10% of the facility, and so they're getting that back online now. And I'm hearing from the update that a lot of work's been done to get those on. So we should see the hash rate get close to 560 at the end of this year. So they're putting some new S21 miners in place, the ones that were damaged, and so we'll get that hash rate up there. They are a small mine, operational power 20 megawatts, efficiency that should improve as the new S21 miners come online. So efficiency of an S19 miner is about the oldest S19 miner is about 30 joules a terahash. So slightly better. They probably got some of the newer models of the S19, maybe a mixture of XPs, S19 Pros. But you know, they do have a hodl. So you know, they sold 21 Bitcoin, so they sold 200% of what they produced, but they've still got 45 Bitcoin in their hodl. And you know, it's a small company, well run, but again, it's like, what do SATO do? What do some of these smaller miners do? You have to then look at, you know, is there any potential for merger, acquisition, for, you know, 2 or 3 of the smaller miners to get together and then sort of have, you know, maybe some of the synergies, maybe some of the shared costs can be reduced if you've got, you know, departments that are covering, like, you know, if you're merging 2 or 3 companies together, you don't need 3 payroll departments, you don't need 3 HR departments. You can reduce staffing costs that way. You don't need 3 CEOs. So there are some synergies. And then when you're, you know, a company that may be valued at 150 million instead of 50 million, as the 3 joined together, you've got more chance of raising capital to get that next level from there onwards. So, you know, SATO certainly fit in that criteria. You should be having conversations with other miners to see what opportunities there are for them to grow together organically that way. Because the challenge is, you know, it's going to be difficult to grow with any significance. The market capitalization, according to there, is, and that's in Canadian dollars, that's 21 million. So, Bryce, you'll have to tell me what that is in US dollars, probably what, 15 maybe?
15, yeah, 16-ish.
15, $16 million. So if you were to sell 100% of your shares, you'd get to 30 million. Would you be able to sell 100% of your shares? I doubt it. You know, this is the issue. So, you know, Argo just raised some money by selling, I think it was 10% of its shares. They had to offer a discount on that. I think it was 10% discount or something on the share price just to get people to come in and buy. So this is a challenge for smaller miners. These big ones just selling shares every day. I mean, you know, Marathon can sell 1 million shares tomorrow and no one would blink an eye, no one would even notice. But Soluna to sell, you know, 100,000 shares, everyone would notice. And so that's the difficulty you've got.
Yeah, I threw Soluna up here. Speaking of small miners, and
you've moved on to Soluna. So yeah, Soluna is probably in a slightly different position than some of these smaller miners because they've got a number of separate business units. In terms of market capitalization, they're not much in terms of valuation, not much more value than SATO, but they're a lot bigger in terms of what they do. They've got a hash rate which is 50% higher than SATO, so they mine 17 as opposed to 11. That's their operational hash rate. They have a hosting business there, which is more than twice the size of the self-mining business, and they also have a HPC business which is starting to deliver revenues as well. So in the next quarter, not this quarter, but maybe the next quarter results that come out in October, November, they'll be releasing information on the HPC revenues as well. So you know, really good company. You need to pay a little bit more attention to what they're doing there. Have a look at the presentation because it tells you all these projects that come online. So the way that Soluna operate is they have access to I think it's a 2 gigawatt pipeline of power. But to utilize that, they have to come up with these projects, and they design the project, and the project will need front ending with cash, and they have to look for a partner to do that, who bring in the cash, and then there's like a revenue share at the back end of it. And so they've just closed funding on the Dorothy 2 project, so they've managed to get $30 million of funding. So they'll deliver that project now. That'll take probably the next 5-6 months to deliver that project, and then the revenues will then come through for that project. And if you look at the presentation on their website, it gives you more information about what their revenues to deliver for that. And it's significant revenues, and they've also raised 13.75 million for their AI business. So they're going into the AI business. They've got 2 or 3 megawatts in their model. Again, look at the presentation, look at the renders for these. I think for all the sites I've seen, if they pull this off, I've questioned. I mean, Bryce, you've shown me video clips, and I thought it was AI, but it was actual video clips of Soluna sites. I like the way they put these sites together. The actual infrastructure looks really smart. Now, we've not been to one of them, but when you look at the photographs, they look really smart. Look at the renders for the AI HPC business. It looks something really very futuristic and very smart. Looks the part. And it could be like an easy sell if you were to go and present that to a potential client and say, do you want to be part of this project? It looks really smart. And this is how they'll grow. As I say, they've got a pipeline of 2 gigawatts. So Project Dorothy 2, that's already been done and dusted in terms of sign the contracts. Now they'll get the projects underway. The next project, Project Catty, is 166 megawatts of power. So that's a significant project. So they'll now start going out there to try and get a partner for that one. When you get a partner for that one, you're looking at a company that's going to start delivering some serious revenue. So have a look at the presentation. It does give you two different cases for revenues. It gives you a bear case and a more bullish case. And the bullish case ain't better than where we are today. So, look at that and then, do a little bit more research, because it's something I've looked at last few months. We want to get John on. There's still some outstanding questions we want to ask John. So I've got a few questions to ask him. We'll get those covered when he comes on the channel this month here. But, for transparency, I bought a small amount of Soluna, put it in my pension. So it's in there to stay for a few more years. Not quite at pensionable age yet, I know. And I'm a few years older than Bryce. But interestingly, when we were in Dallas, Jason Les thought I was the same age as him. And I had to actually correct him and say there's probably 20 years between us, Jason. So, it's obviously that oil of Ulay I've been using every day to make the skin look
looking really good, buddy. Yeah, I had joked about it being your 35th birthday, and a few people actually said, "Hey, did Bryce say 35th?" And I had to correct them. I have a fairly dry sense of humor sometimes, you guys. Now, we've got 3 big individual companies left. Anthony, we were supposed to be talking for an hour here. We've been going for nearly 2.5 hours. You're having to have a second snack there. We've been going so long. But we've got a couple big miners left. We've got Bitdeer, CIFR, CleanSpark. We're at an all-time high for concurrent viewers. We're at 110 viewers right now, you guys. Smash the like button for Anthony here. He's pulling a 3-hour shift. It's 8 p.m. in the UK right now. The guy's trying to go to bed. But we want to get your thoughts on these 3 heavy hitters in the space, Anthony, and then we can wrap it up here. So Bitdeer, we actually had interestingly enough, we had the pleasure of meeting the team there to get a photo. Anthony almost knocked out one of the poor Bitdeer employees with his watch when we put our arms around the guys to have the picture taken. But really interesting business model. You talk about vertical integration. Bitdeer is really bar none. They've also got the Seal Miner 2. So the second development of this, the initial tape out wafers are anticipated to be coming in late September. So only next month, Anthony. Really exciting time to be part of Bitdeer. They made some big moves this week, actually, to the upside as well.
Absolutely. I like Bitdeer. Bitdeer is in my portfolio. So again, with this company, remember the self-mining, which we're highlighting here, is actually only a small part of the whole business. It's about 40%. So when we look at valuations of companies, and you look at Bitdeer, and it's not like they've got a small amount of hash rate. They've got 7.5 hash rate growing to nearly 12 by the end of the year. So, and next year is a whole different beast. They're going to be top tier next year, because a lot of the projects that they're working on come to fruition next year. So they are building on sites in Bhutan, in Norway, in Ohio. I think they've got a second site in America outside of Texas that they're doing now as well. So, they are pulling out all the stops. And then they announced this year that they're building their own machines. Well, that, it surprised a lot of people. But when you consider where Bitdeer were, Bitdeer formed from a company called Bitmain, who make, most machines in the industry at the moment. So it's no surprise that some of that secret sauce came out of the Bitmain company and became part of Bitdeer. And, we said before, Bitdeer have 50 people in R&D working on all their future development. So it's not like a small team. We talked about the Gryphon team being 3 and the Bit Digital team being 15 and the Marathon Digital being, I think Marathon about 70 now. It's grown to, it was 15 about a year ago. So Bitdeer have 50 just working on R&D. That's, it's different. Some of these companies are really, really different. So Bitdeer have self-mining, hosted mining, cloud hash rate. So they have 3 levels of mining operations. Now they've gone into the HPC space as well. So they've already got the HPC delivering revenues in Singapore, and they're looking to use that as a model to grow more HPC out there. The one thing that they've got more than everybody else is they've got access to power. So they've got, they're currently utilizing just short of 900 megawatts for their mining sites at the moment. So they've got a big hosting deal. They've got, 7.5 in operational hash rate and about 1.7 in cloud hash rate. So, a lot of hash rate being utilized in that 900 megawatts, but they've got access to 2.5 gigawatts of power. And, we've just spent probably 10 minutes going through the core scientific and what they're doing with their power. And, could Bitdeer, having access to that amount of power, should they be thinking along the same lines? If we can land a similar hyperscaler like CoreWeave, and that could do our business as well. So it'd be great to get Bitdeer on the channel this month and see if they've been having any sort of them telephone calls. I'm sure it's not just Core Scientific. You know, this company's got twice as much power as Core Scientific. Core Scientific got Core Scientific has got 1.2 gigawatts. These have got 2.5 gigawatts. So there's a whole difference in power there. They do sell the Bitcoin on a daily basis, and Bitcoin mined 24.1. Well, if you look at Bitfarms was 24.6, Hive 24.7, Marathon 25.2, which is the leader this month. 24.1 is a good month again for Bitdeer. So do everything that says on the can. The Seal miner, it could be the game changer for them if they can get down to the levels that they're saying in their update. So they came out with the first generation at 18 joules. They're about to come out with the 14 joule, like you already articulated, Bryce, a few minutes ago. By next year, we're going to have 10, and these are all planned. Now, the 5 joules, which is like, hang on, if Bitmain have got a 15 or a 13.5 joules, and you're coming out and saying 5 is a bit more aspirational. It's like, we put a target out there because we don't know where we're going to get to. But the other 3, the 18 we've already achieved, the 14 is coming online next month, and we'll get to 10. Those are definites. And so, you get out a miner that's delivering 10, and nobody's got a 10 joule miner at the moment. We'll expect Bitmain to come out with more news. We'll expect Block or Auradine to also come out. I don't know how far advanced MicroBT. I don't think MicroBT, in terms of efficiency, have the same levels of Bitmain at the moment. And I know Canaan certainly don't have the same levels. I think Canaan's most efficient miner is about 18 as well. So for Bitdeer to come out with their first generation and be at the level as the number 3 miner provider in the industry, that was pretty much an amazing announcement. And they're saying we're going to better that. And so, if they can come out and deliver that level of efficient miner, not only will they be able to increase their hash rate cheaper because they'll be doing everything in-house, but they'll also have the potential, should the Bitcoin mining machine prices rise like they did in 2022, be able to offer them as purchase for other miners to buy. So I think it's a great story in the same way that the CoreWeave and Core Scientific is great for HPC. The Seal miner for Bitdeer is a great story for them as well this year.
Yeah, it most definitely is. Great to get your thoughts on that one. Now we've got CIFR and CleanSpark left. CIFR, we're going to be having Tyler Page, CEO, on the 20th to talk about earnings. So looking forward to that one. There was a lot of discussion, potential buyout rumors for CIFR. As of now, we haven't seen anything come to fruition. Tyler actually put out a great tweet this week talking about the fact that Yahoo Finance is no longer covering these Bitcoin mining or crypto mining companies. So for those of you who missed it, we're now integrating the live news feeds onto the Power Mining Analysis website. So you guys can still have one central site to get all your Bitcoin mining news directly from these miners' pages. With that being said, I'll let you get into CIFR, Anthony. Very exciting times here. Number that stands out to me, obviously the 2.7 cents power cost.
That's from a reported perspective, that's the lowest power cost that we see now. Does the power sales that they receive mean that's even lower? We'll ask Tyler that question when he comes on the channel. But they've been consistently reporting 2.7 for a while now, so they have got I think they've got a fixed cost where they are in Texas. Hash rate 8.7. It's going to be growing a bit further. They've announced an increase in the original hash rate for this year, but next year for them, when their new site comes online, should get them into sort of like that mid-20 range. So again, they could be next year in that top tier of miners with the likes of Bitfarms and CleanSpark and Marathon, Riot and IREN. They're growing their HODL on a regular basis as well. They're selling just part of their HODL to cover operational costs. So again, HODL not too much lower than what Hive Digital have got there. So valued at 146 million. We know it's a bit less today, but as at the end of July, 146 million there. There has been some interest in CIFR recently, so it looked like there's a hyperscaler or someone in the HPC AI business circling around there, because, you know, they're looking for power sites, and CIFR fit the bill. They've got, you know, a couple of big sites that they'll have ready. That one of them will come online next year. Is it the Black Alpha site? You know, we don't cover CIFR too much, but we know that people are interested in CIFR, so we definitely thought this month starting, you know, including some of their data in our numbers, and I'll try and get them in the comparison table to show you how they compare to the other miners as well. That'll be interesting. But fleet efficiency 29, that needs to come down a touch. That's at the same efficiency that that SATO are at. We want to see that figure closer to 24, 25 at this point in time. We want it even lower for next year. And I'm assuming when their new site comes online, though, and when they grow their hash rate this year, it will start to come down, because you're going to grow your hash rate with probably the latest machines. So it'll be looking forward. We got to meet Tyler in Nashville. Had a drink with him, and you know, he's very open, transparent, says exactly what it is on the tin. And so, you know, we reached out and said, look, let's do a podcast together, and he's coming on this month. So looking forward to that. Make sure if you're a big CIFR holder of shares, I've got them in my portfolio. Then get on the channel, because we'll be hitting him with the questions, and I'm sure it'll be a good podcast.
It sure will. And as you're talking there, I'm just booking in Hive for their Q1 podcast as well, Anthony, on the 14th. I'll circle back to that schedule in a second here. Last miner for you today, Anthony, CleanSpark. A lot of news obviously going on for them this month with the acquisition of a number of sites. They just completed the 75 megawatt acquisition in Wyoming, just shy of 500 Bitcoin for the month. Huge hodl position. What's your thoughts on CleanSpark?
Yeah, big news stories. They sold 2.5 Bitcoin. So let's wrap it up from there.
There you go. Explain that. That's director payout.
Yeah. So what we see in some of the mining companies is, and it is open and transparent. You can find it. So a lot of CEO and C-suite salaries are available for people to go and access. They have to provide transparency on their salary, their bonuses, their stock compensation, and actually some of the miners have managed to jump in and get rewarded in Bitcoin as well from what they mine per month. And CleanSpark are definitely one of those companies, because I've seen the elements of Bitcoin that Zach and Matt receive from as part of their salary compensation. So that will be the Bitcoin that's sold, 2.5. That's going to directors each month. So they are effectively hodling as much as they can, and they've grown that hodl really well over the last sort of like 8-9 months. And bear in mind, you know, 18 months ago, they were like IREN. They sold on a daily basis, so they benefited through that period when the Bitcoin price was 69,000, selling every day. And now their strategy is to hodl. They firmly believe that Bitcoin will go in that north direction over the next 18 months at least. So they're going to be wanting to make sure that their strategy is, and I suppose in the same way MicroStrategy have so much Bitcoin on their balance sheet, you know, to be in that position there. And it's held them well. I mean, you know, we just mentioned 5 minutes ago their market capitalization, which is a bit lower today, but it did reach 4 billion back in March. And it was 600 million in October last year. So it nearly 7x'd in about 6 months, in a 6-month period. And so shareholders will be really pleased who bought in anywhere in the last 18 months in CleanSpark. Will be sitting on sort of nice profits. I've got CleanSpark in my portfolio. So, you know, they certainly were one of my best performing shares up until March. They've come off a little bit since then. But they do deliver good updates. So 494 mined. You know, again, hash rate over 21. They've got to get to 32 by the end of the year. So they've got to increase hash rate by the same rate that Bitfarms have got to do. And what they've been doing recently is they've been purchasing smaller sites. So you can see the update on the screen there. They've just bought another 75 megawatts of power sites in Wyoming. 75 megawatts. If you look at 100 megawatts, gives you between 6 and 7 exahash. So that's going to be sort of like 4.5 to 5 exahash of there. So add that to the 21. you want to get closer to 32. So, and I think that they bought some other sites. So they've got some expansions in their current sites that are coming to fruition. So I would expect the hash rate to start bumping up in this next few months in readiness for the end of the year. So I think they'll do it. They've certainly got the treasury to sort of back them up and do this sort of thing. They can pay part cash and majority shares in some of these deals, like Riot did with Block. They gave a small cash amount but a big share amount. And if everything goes to plan in some of these deals, there's more shares as a bonus if everything's delivered as required. So
gotcha.
But a very good update from CleanSpark. As I say, that they're in terms of market capitalization, they're behind Marathon now, so number 2 miner. Be interesting, them really. They're sort of like this year, they're on par with Riot in terms of where they're growing to. Riot are going to be 36 by the end of the year, CleanSpark 32. So it'll be interesting to see if that market capitalization will stay in favor of CleanSpark, or whether the market starts giving Riot a premium. Bear in mind, Riot have got very little debt, and I think CleanSpark are the same. They've got very little debt. It'll be interesting their results when they come out. They will have a net loss, absolutely, but we'll see what the impact of that net loss is compared to what Marathon and Riot's net loss was.
Yeah, it will be interesting to see. Anthony, we've done the marathon today, 2.5 hours. I just quickly wanted to bring up our schedule here, imparting you guys. This is what it looks like in terms of CEO interview schedules for the next 4 weeks on the channel. As we were speaking here, I just booked in Hive on the 14th as well, Anthony. So 5 CEO interviews next week. Make sure you get your sleep. I'm going to be heading out to Christina Lake for the weekend, you guys, right into DMG's territory there. But we'll be sure to get you Bitfarms interview with Ben on Friday, and be back on Tuesday for Bitdeer. Anthony, any final thoughts today? A phenomenal podcast here, buddy. 2.5 hours. Covered all the miners. You made tables for each and every one of them. We really appreciate all the effort here, and hopefully can get a like out of everyone for the amount of input you gave today.
No, it's been a good update. Fortunately, we had a lot of news to cover today, so it wasn't just about mining updates themselves. We've given people a flavor of the financials from the 2 big miners who released those the first. So Riot released on the 31st of July and Marathon on the 1st of June. So those were 2 timely updates we could include today. As I say, we're going to get Core Scientific at 10:30, I think, Central Time. So that'd be a good one to listen into. So I'll probably try and listen to that one if I haven't fell asleep, because obviously my time zone over here, it's now 7:30 p.m. So I think that it's another 2 hours for that one to come out. So maybe I'll to grab a quick bite to eat and then listen to that update there, because that'll be interesting from the Q&A point of view. I mean, I know the results aren't going to be as great as they were in the first quarter, but we knew that was to be expected with the Bitcoin price falling back. And if the Bitcoin price doesn't rise, it means that Q3 is going to be also a challenge for miners, and not just because of the hodl, but because of the Bitcoin price. Before the hodl itself, Bitcoin miners were achieving $100, $110 a petahash per day. Now they're getting sort of like 38, 39. That's a lot less revenues. Go back to 2021, these miners were getting $400 a day per petahash. And now they're getting less than 10% of those revenues now than they were getting back in 2022 for every petahash they've got. So, you've got to know, this isn't for the faint-hearted. And this is why you're seeing these big swings, because the market still doesn't really understand, and bits of information will come out. So that information from IREN yesterday will have impacted their share price. We saw it drop today. I think it was down 9% at the start of the podcast. I haven't looked at the share prices since, but Bitcoin down will impact all miners. But that news yesterday will impact them, again further. But we know that these things can turn around very quickly. The volatility can take a couple of days. You think what we were talking about last week, the price is back up to 60,000+. The mining stocks rally quickly. we've seen it happen so many times. I don't get too concerned, really. I mean, in hindsight, those people who were sort of like took advantage of the market on Monday morning, that not for the faint-hearted. When the Bitcoin price has dropped 6-7% in the last 24 hours, and you're thinking you've bottomed out, and you're going to start buying mining stocks. And I know some people bought IREN and they got it for like just over $6, and it went back to $8.50 that day. If you can turn around a 30% change in one day in a couple of trades, just buying, it's not actually options, but just buying and selling shares. That's what attracts a lot of people to this space. I personally didn't. I didn't buy any shares. I've used up my my funds for shares at the moment. So if I'm going to buy some more shares, I have to sell some shares.
Yeah, fair enough.
And
well, Anthony, the good news here, buddy, is
my portfolio looks like from the stocks I've got in.
I was going to say the good news is we've now got a 15,000 strong sales team coming in from Morgan Stanley to help push Bitcoin and hopefully the Bitcoin miners from here. But you guys, a phenomenal podcast, still 100 people live, Anthony. So thanks so much for tuning in. We'll be back Friday, you guys, with Ben and Bitfarms Q2 earnings. If you're still here, please do hit the like button on your way out. It's a big help in getting this podcast to other people who might find it interesting. Feel free to subscribe to the channel, of course, and leave a comment or question below. We'll add it to next week's list. Thanks so much for your time, Anthony. Everyone, thanks for tuning in, and we'll see you here on Friday.